Hello, everyone. I'm setting up this new space. I just got spaces activated on my account today, and so I'm excited to try it out. Let me just approve this request. Got it. So we have Jon as a speaker as well. Yeah, I think the reason why the spaces thing only got approved for me now is that my account was private for quite a while. Oh, actually, let me also. Sorry, I'm just getting set up here. Um, Yeah, connecting my AirPods. Hey, Jon, can you hear me?
Yeah, I can. How are you?
Good. This is also my sneaky way to get to chat with you a little bit because we were both in a space just before, and the host had to wrap up all of a sudden, and I'd only been in there for a few minutes, so I'm curious because we were I guess the last question that you got was about gold or real estate, which is fascinating to me as well. So I was hoping, for us to talk a little bit about that too. I guess the first thought I had as well that I thought of adding, which I totally agree with you that real estate is really in a bubble, and it's a little bit hard to even see that, I think, for maybe our generation, because pretty much since the early 80s, housing prices have been going up. So that's going on, what, like 30 years now? So a 30-year
Yeah,
bubble. I don't know if you agree, but and so one of the things that I think is maybe hard to see um, for people today is that, well, how vulnerable real estate is to prolonged downturns. Because one of the reasons is that it's something that by definition sits in physical space. It's in within the it's not portable. It's within the confines of certain a certain country jurisdiction, and it's already subject to, you could call it, capital gains tax. I mean, real estate tax is a thing. Like here in Austin, Texas, is like taxes are, I think I don't know, in Austin specifically. I think Texas wide it's like 1.6% tax annually, and then of course you have to throw in that it's a consumer good and it takes money to maintain your real estate. So you have this kind of ongoing cost that now, of course, for the past 30 years has been justified by extremely cheap credit and rising prices. But then that really can come around and get really nasty on the downside, where when people are forced to sell, or when you want to move house, or when you want to move out of the country. um, and so despite that, I'm more bullish on Bitcoin than I am on gold. I also am more bullish on gold than I am on real estate for the next decade, let's say. And so that's why, like, I wanted to do this, this hangout. And I'm also curious, maybe be interesting to hear from some people who've actually lived in a real estate bear market. Like, what is that like? I'm thinking about maybe Latin America or some other places, just to see. I remember really kind of in Buenos Aires, like picking my friends' brains about, like, what is it like to be in a real estate bear market, because I had never lived through one. So yeah, I'm just kind of floating some thoughts here. Do you have more thoughts, Jan, on like gold versus real estate?
yeah. Well, I fully agree on your conclusion. I think 1.6% property tax in Texas. You told me.
Yeah, thereabouts. Yeah.
Oh, okay. Yeah, well, that's not very much, I think. But and the other disadvantages about moving, yeah, if I was thinking real estate. As an investment, of course, if you buy a house as an investment, you don't have to live there, so you can just
Mm,
leave it. But and if you have to move, you have to move anyway. So, but the thing is that, yeah, and but I agree with you that on the next 10 years, I'm more bullish on gold than I'm on real estate, because real estate, yeah, for a lot of reasons. I just told, for the people that didn't listen in the other spaces, there has been a lot of deregulation since the 80s in mortgage lending, which have turned banks into primarily mortgage banks right now. And let's say 50 or 100 years ago, they were primarily lending credit to productive businesses. So that has been a big factor to the real estate bubble or the rise in price since especially the 90s. Add to that there has been it's quite interesting that classic economists like Adam Smith thought of land and thus housing as a very special asset because it's in finite supply, it's immobile. So if you have, for example, in a city a lot of economic growth, then the land of that city will rise disproportional to goods and services because there, if the price of land rises, there is no additional supply triggered. So it's a bit of a special asset class. And before the 20th century, land was taxed in a way. It was tax was much more on land and property and much less on income, labor, and
Right.
profit. And that all changed, let's say by 1900, but then it took a while before the banking deregulation I just told you about. And so then it was this, by the way, this is all based on a book by Josh Ryan Collins, which I was reading and also followed his sources and things, but it's really fascinating. So yeah, since the 90s, real estate really took off. And of course then it became a sort of a feedback cycle because when prices started to go up, demand for mortgages went up, and that triggered more, or that pushed up prices even more, and etc. etc. And also, normal people have less money to spend, and then the consumer spending has to come from people with, from the wealth created by increased housing prices. So that is the feedback cycle this economist talk about. But of course, it's totally unsustainable, and banks should be lending more credits to productive businesses and much less to mortgages. But we are so far now into the debt trap that it's really hard to come out of, and also it will require pain to get out of. One way, of course, to for the market to liquidate is that, yeah, inflation is one solution, and then I think gold will do a lot better than real estate, because real estate and also stocks are a few of the assets that are very much inflated, because also the feedback cycle, the housing also requires lower and lower interest rates, and of course that also made a lot of people save in stocks instead of money, and well, anyway, I'm a bit ranting.
Oh, I appreciate it. Yeah. No, that's really interesting. And I think you're right about that feedback cycle. That it's kind of like you're just getting deeper and deeper in the hole of this debt trap. And what I wonder is that, for the past, well, first, like one thing that has occurred to me when you read about kind of the history of the housing market is that it was not obvious at all for people to own homes in the past. Like I just came back
Right.
from a trip to Bruges in Belgium, and I was reading just about most neighborhoods in Bruges historically. 75% of the houses were being rented by people.
Yeah.
And also, if you look in the UK, like often home ownership was as low as 10%. And I think that
Yep.
makes sense in a hard money society where your savings are in the hard money and the cash, are in a life insurance, things like that, which you can borrow against. But saving in, especially for, smaller households or regular households, it doesn't make sense as much. And so I just, that narrative of like everyone should own a home is actually fairly new. And of course, home ownership rates are now, especially in the Western world, historically, I think extremely high. And I think the challenge is that because of that, the housing prices have been pumped up so much because it's artificially low interest rates, that now accessibility actually becomes a problem for millennials and people who are younger. the dream
Yeah.
of owning a home is now, it's kind of out of reach for a lot of people, especially when they start comparing to like the how life was in the 70s, where a regular guy could have three kids and a home, and his wife could even stay at home. So I think that, I guess my thesis is that for the bear phase of this cycle, like we've had the bull phase now, um, this is probably like the exuberance phase where everybody and their mother is in real estate. Um, but like that, for the flip side of that, to become a narrative more about accessibility. It's like, oh, it's no longer about ownership. It's like, no, no, no. Everybody has to have a decent place to live. And so then you start looking at, oh, rent controls, right? Especially in an inflationary environment, you often see that where they cap the rents. And something we already saw with COVID is that they, what is it again? The eviction ban. So you can no longer evict a tenant who's not paying. So you have this weird situation where landlords are actually screwed over. And so I think that can turn a lot of people off. Maybe not so much the exact things that are in place now, but it's more the uncertainty, like what's next, what's going to happen tomorrow. If I own a home, are they going to like, even if we have 20, 30, 40% inflation, are they going to cap the rent that I can charge? So I don't know, I'm just kind of speculating as to what could be catalysts for a bear market in real estate. Let me also approve Reggie here. Um, yeah, feel free to jump in,
It's
and also if people have thoughts and questions, feel free to raise your hand, and I'll. This is my first time moderating a space, so it might not go as smooth as in some other places. But Reggie, go ahead.
you have
Hello.
to unmute. Yeah. Hi.
Hi, how are you?
Hey, hey, doing well. It's been a while. I think last time we saw each other was at a Bitcoin conference, maybe in 2014 or something. It's been a long time.
Yeah, it's been about that time. I think that was probably one of my first conferences.
I think that was the conference where the gentleman from eGold was also speaking. Like some, yeah, and then you were there. Like definitely some of the early people that noticed Bitcoin.
Yeah,
Mm,
that was probably the early years of institutionalization in Bitcoin.
yeah, yeah, yeah. Well, I mean, that was probably maybe even the angel phase. I feel like institutions were still just, I don't know, very far. I feel like there back then there was so much career risk in terms of getting your firm involved in Bitcoin. Like I think it was mostly like independent people who started getting into it. But so yeah, I'm curious. Do you have any thoughts like for the next decade? Gold, Bitcoin, real estate.
I actually wanted to ask a question because you were asking about a bear market in real estate,
Mm-hmm.
and that's, I think, very location specific. I'm trying to think of uh, an extended bear market in Manhattan real estate, and I can't think of what even through the Depression. And the reason it could be that I couldn't find it, I actually looked for it. And the reason most likely is because of the economics of Manhattan and New York City real estate, at least around the Manhattan Center. Similarly, in London, um, there's, I guess you could say, implicit put options that will prevent real estate from dropping below a certain price. So for London, London is probably the world's second largest offshore center. People don't think of it as that, but many foreigners put their capital in London to store it. And so that's why London prices always appear to float above what their fundamental value or cash flow should be. Similarly with Manhattan, and similarly with the LLCs coming out of Delaware in the States. But those are outliers, and throughout other portions of Europe, South America, definitely in Africa, and Central Asia, you could probably find a bear market coming forth. I've made a stagflation call in November of last year, and it looks like it's coming true. And in stagflation, I can see without that implicit put option, you're going to have some issues with real estate, particularly since I think individual incomes, price adjusted for inflation, are probably going to lag. But these are just my outside thoughts. What's your opinion on that?
Yeah, I think that's a great point about the location specificness of real estate, and it does seem to me that like the locations you mentioned, like there is a kind of a robustness that does not that exists there that is hard to find in many other cities, and I feel like to me the metaphor that works is as far as real estate goes is that in a bear market it's kind of like when a human body gets hypothermic is that the blood will start to go to the vital organs to kind of keep the heart pumping and those kind of things, and then away from the extremities, and so like financial centers like Manhattan and London, it makes sense that even if there is an overall horrible bear market, that at least the declines would be more manageable or lower, and also if we're talking about stagflation or even high inflation, I think people are going to get murdered in the bond market, of course, and possibly a lot of stocks too. And so, you know, losing 20% might really not be that bad. I remember seeing a study of Buenos Aires about what happened there in during the Corralito in 2001, where basically they had a run on the banks and then bank holidays, and during that bank holiday period, they slashed the value. They basically admitted, like, yeah, the peso isn't worth much at all, and so they admitted, and so there was a devaluation and a big real estate crisis all over Argentina. But in the stronger neighborhoods of Buenos Aires, eventually it recovered. So I feel like that validates your thesis about I forget the word you used about that, like, robustness of those areas. Does that make sense?
Yeah, and for people who are listening who might not be nerdy enough to like to follow the ins and outs of high urban real estate, I would be reticent to tell people that the real estate of Manhattan or London is resistant or robust because, from a fundamental perspective, the real estate is overpriced and will probably drop. But because it's a safe haven, it always has a bit. Like you said, the money's going to run into a safe haven asset, and a lot of people with capital consider Manhattan and London safe haven asset. Um, the I my writings have been circled around, especially for the last few years, what I call the everything bubble. Normally, when equity markets decline, that capital runs into the bond market. Bond markets decline, that capital runs into the real estate market. Everything's a bubble now due to excessive printing, very low rates. You say you think bonds are going to get killed. Those negative real rates in Europe, there's no way out of that. There's absolutely no way out of that.
Right.
So once you break the zero bound and something happens, the losses are going to be of capital because it's too late to lose on the debt service. So they're in trouble. I think a lot of the Chinese property holders are in trouble, and that's starting to come to fruition there. But since it's happening all over the world, not quite in unison, but together, it's very interesting to see what the end result is. I can't think of another time in recent history where we had a similar issue. So it's not a matter of who's going to crack, it's who's going to crack first or who's going to crack worse.
Can I ask
Yeah,
you,
good points.
Reggie, what are your thoughts on the Chinese real estate market? Because what I understand of it is that also because they have capital controls in China, that the investment possibilities in China are very limited. So everybody with a little bit of money invested all his savings in real estate, more or less. So, what are your thoughts? Have you been following the Evergrande story and all the developers? And do you think there's going to be an epic crash in Chinese real estate?
Well, I followed it very closely post 2008 because I was very suspicious of them. They didn't have the same crash as everybody else, but their reporting, and I think most people know, is, I don't know, a polite way of saying, is not as robust as certain other nations.
Mm-hmm.
But because they didn't have the crash, they didn't have the same crash as Europe and the US because they stomped the pedal on profligate lending. Um, and now it's time to pay the piper. They're going to have a real estate crash when it comes to applied economic values. That's without a doubt. If the values don't transfer, if they don't sell, technically, you could say, well, the prices haven't crashed. But if the property is worth less, from a comp perspective, other properties in similar areas, adjacent areas, are going to be worth less. And if those properties are worth less, the domino effect's over. So it all depends on how you value it. But from an applied economic perspective, there's no way in the world that those property values don't decrease. Okay. And not to pick on China, but that problem is prevalent in most places. If you look up throughout Europe, where you don't have robust income growth, you have a spike in energy prices, and you have supply chain constraints, which gives you structural inflation. Plus, you have printing, which is going to give you cyclical inflation. What do you think is going to happen to the property prices, particularly on the commercial side, especially after a year of shutdowns, a year and a half of shutdowns? That's weakened a lot of the SMEs.
Yeah,
Commercial
and
real
one
estate cannot sustain with no positives.
like
And
once you
then
start
another.
thinking about, sorry, I just wanted to add a thought. Is once you start thinking about fundamentals, I find it really hard to see upside in real estate, except for maybe some small pockets. And like the point about energy prices, I feel like there's been, at least out here, there's been so much new construction, and it seems like people just don't take into account potential, higher energy prices, and their houses are just built with horrible insulation. And it makes sense because most of it is just built by developers that are flipping houses. And so I don't know, there's so many like knock-on effects that make me worry about, yeah, it makes sense if everything is booming, but then what if you turn it around and like, turn fiddle with some of the variables, like all of a sudden there's more taxes, or all of a sudden there's higher energy prices. It's just something that I feel like there's a lot of blindness for. Go ahead, Jan.
No, I was just thinking about the real estate market a bit more, and also what I mentioned earlier is that let's say the majority of banks across the world have become mortgage lenders, and there are many real estate bubbles. But if those real estate bubbles pop, then all the banks will go into deep trouble, and then of course, if all the banks will collapse, the central banks will come to the rescue. And I mean, yeah, I'm just thinking that I'm not sure if they can or will allow real estate nominal prices to go down that much. It can't be done. I think um, we will see real housing prices correct more through inflation.
Let me add, Christian. Do you have a question, or do you want to share something?
Yeah, I had a quick question. Just given that we're discussing sort of the Evergrande situation and potential, crashes in the real estate market, given that in the latest sort of downturns, Bitcoin, for example, is usually kind of correlated to the stock market and tends to sort of go down. I want to just, if you saw such a crash or sort of downturn coming up, like, would you see Bitcoin as something that would sort of hold through as a good sort of hedge? Or, when you see sort of things like banks potentially raising rates, like, it seems to me like it might not be the best place to sort of find a safe place for your assets or your investments. So how would you see Bitcoin doing to the next time when such a downturn would come across?
Just to clarify, can you just clarify? Do you mean in the short term, or do you mean over the next 2 years?
Both. I mean, in the short term, I'd imagine that it would be still correlated to the stock market, and it would probably not be a very safe haven, so to speak. But would you see that sort of changing maybe in the long term, or
Right.
are we already at the stage where that it would be a safe haven potentially?
Yeah, well, I mean, I wonder, like, I guess we're all bullish, or I guess 99% of the listeners here are probably all bullish on Bitcoin. And so I think we all get the fundamentals, and it's just, the bottom line, I think, is just it's better technology. And so why wouldn't it be adopted? but I wonder also if part of what's going to happen because of this like kind of revolution that started with the internet and now the digitization of wealth, which is Bitcoin, if what we're going to see is like actual regime change, and so in a time of regime change, I think it's not a given that that's going to happen, but I think there's a significant chance that we'll see, reverberations in educational institutions, in political institutions, in political alliances, and in what parties are in power, in who knows, even like the borders of countries and things like that. And so then if that's going to happen, then like, well, what do you want to be invested in? To kind of make it through to the other side. And so to me, it's very clear, like, well, I don't want to own real estate, or at least not as a significant, investment in my portfolio, because even what we were talking about with like London or Manhattan real estate, if there is, if there's a transition to, populism, for example, or however you define it, just a really different political culture, then real estate is very can become the goose with the golden eggs that you can then slaughter and give it to the constituents, being like, yeah, we're going to do millionaires tax, or they were talking about that in London for a long time, and of course many people assume, well, it's not going to happen. But if there's a really change in the winds, then you want, in my view, you want to own an asset that has little to no counterparty risk, and that is scarce and fungible. It's easy to sell, it's scarce, and it also, you don't depend on a political counterparty to keep their promises. And so to me, it's like the safe haven to live through this winter is Bitcoin, is gold, and then real estate is going to suffer, I think. I know this is broad sweeping terms because people could live anywhere in the world, and so am I talking about all markets? But really, if there is high inflation around the world or in the Western world, I do think almost all real estate is going to suffer, at least expressed in gold or expressed in Bitcoin. So anyway, long answer short, I'm the most bullish on Bitcoin because I think, this was my whole quest. It's like, why did I get in investing in the first place? I needed to find an answer to this question: where do I go? How do I invest in an inflationary depression? And now that we're 10 years, I mean, for me, I guess I start wondering about this in 2005. So it's like 16 years later, it's coming. Like this is it. Like I agree with Jack Dorsey today, hyperinflation is going to pop up in places where we don't expect it. Germany, the Deutschmark, the mark was a strong currency, or considered a strong currency in the 1910s, and so the Weimar inflation was kind of took people by surprise. They thought Germany was a strong creditor nation, and they wouldn't destroy the currency, or that people wouldn't sell the currency. But then eventually they did, and so we shouldn't rule out that the dollar and the euro, that they both could face very high inflation in the next decade, I think. Does that answer your question?
Yeah, I think it does quite well. It's good coverage there. I mean, it's funny you bring that up. I mean, I'm based in London, so one of my next decisions probably is do I buy a house or do I keep my sats? And I guess one of the worries always is like, you invest a lot in Bitcoin and start worrying about having everything concentrated in one asset. And there are downturns obviously coming. I'm probably not looking to selling myself, and I'm also quite bullish, but always looking for ways of sort of maybe finding some other assets that would hold in an inflationary environment and are potentially uncorrelated to well, firstly, the stock market itself and Bitcoin as well. But yeah, it's not easy at the moment, so I'll give you that much.
Well, yeah, and I've gotten this question from people, and it makes, I don't know if you've lived through like a complete bear market cycle of Bitcoin. Like it is rough, and I can imagine if you haven't, that it must be kind of daunting to be like, oh my God, like at some point I'm gonna get clobbered with like 60% downturn or 70, 80%. I think, I guess my suggestion to people has been who've been looking at real estate, and I'm not universally. Like I said, I agree with Reggie. Like there will be places where real estate will be okay, relatively speaking, where you'll maintain at least your purchasing power if you're invested in real estate. I think to me a lower risk proposition and a more liquid and universally accessible proposition is commodities. I feel like commodities have been in this extended, especially if you express, for example, express the S&P in commodities, um, or the other way around. If you express commodities in equities, right, global equities or American equities, like they're completely at the bottom. They're now finally coming off of the bottom, and so it's kind of like well, if people get hurt by inflation, what does that mean? It means that oil is going up. It means that grains are going up, pork bellies, you name it, lumber. And so if you own a basket of those, and I'm not an expert in which trackers, you want to consider, you probably want to make sure that they don't bleed too much, whatever tracker you pick. But I feel like a commodities tracker at this point is a way to.
Uh, I couldn't hear. Is it my connection or I can't hear you, Tuur?
Oh,
Okay.
just the last sentence I was wrapping up. It's just that if you fear volatility in Bitcoin, for example, I would suggest looking at commodities and adding some of that as like a buffer because they will go up and down with inflation. And to me, for the next decade, surefire, we are going to go up in inflation. Therefore, commodities should rise handsomely.
Yeah, yeah, I agree. Well, maybe I wanted to add to, I think your name's Christian, that um, Bitcoin is, please correct me if I'm wrong, Tuur, but is a risk on asset. But the thing is that the last crash in the stock market in March 2020, everything went down. Gold, Bitcoin, stocks, everything, because of the margin debt everybody is using, and the margin calls you get if stocks go down, then it takes down everything. So I think it's very important to diversify and also have cash when such a thing happens, and to be able to buy things in a fire sale. And indeed, like Tuur said, also on commodities. I myself own the Bloomberg Commodity Index, which has done very well in the last 12 months. But yeah, and apart from that, I hold some Bitcoin. I hold some gold. I think sentiment in gold is now so bad because everybody sees inflation. Gold doesn't really move. That gold is very much undervalued now. People are like, oh, it's or that's the feeling I get, at least on Twitter. So
Hmm.
that maybe as a contrarian investment, gold is a good option now. But definitely diversify. That's my take.
Yeah, I feel like even if it's true that gold is going to get clobbered with regards to Bitcoin or, quote unquote, buy Bitcoin because millennials are, converting their parents' inheritance in Bitcoin rather than in gold. Even then, I feel like gold is not dead yet. It really, it's still that liquid asset. It's still, if people start to really panic and hurt, like that, they realize, like, oh, this isn't just, because right now everything is kind of explained away. Like there's an explanation for every shortage, there's an explanation for every disruption, travel bans, there's an explanation for that. People losing their jobs, it's like, oh, it's COVID, or but once it starts sinking in, like, oh my God, this thing is permanent. We are in a depression and we don't know when we're getting out. Is it going to be 4 years? Is it going to be six? Is it going to be 10? Um, then I think that asset that is, the yellow gold, it's as cumbersome as it is. It has a 6,000-year-old history as a monetary protocol or a store value protocol at least. I feel like, yeah, for the next decade, I just find it hard to imagine that it would really lose purchasing power. So like, and then but yeah, the volatility, you have to just be able to weather it. I feel like, one thing that helped me sleep better over time was just feeling like intellectually I have been investing in knowledge that's going to be useful during this depression. And I guess that's probably different for everyone depending on what sector you're in or But I feel like that awareness, if you kind of like, acquire skills or knowledge with that awareness in the back of your mind, it's like, oh, well, what if I lose my job? I work in the travel industry, what if I lose my job? Like, is there some kind of backup skill that I want to, and so I feel like knowledge is not often mentioned in discussions about portfolio allocation, but ultimately, it's just another form of energy, your own time and effort and attention. I feel like it's an important part of my portfolio. Like I sometimes theorize like, okay, well, what if, God forbid, but what if I have, suffer a massive hack, or somehow I just lose my stuff, or and then I feel good thinking like, oh, well, I also have some skills, so I could find a job, and I think we'll be okay. Um, so yeah, those are just some more thoughts. Oh, I'm just rambling, but let me add a few more.
Can can
Oh
I
yeah,
can
go
I
ahead.
can I share just one
Of
thing?
course.
I think I said this before you came into the other spaces, and about gold, and that is that very important for gold is that gold is the preferred backup currency for governments. And it is true that after the fall of Bretton Woods in 1971, the US was very much against gold. It tried to phase out gold from the system, but Europe actually wasn't and never has been, even though they sold a lot of gold. Um, and so just this week I heard the central bank of Uzbekistan buying gold and wanting. By the way, they introduced some kind of parallel currency in Uzbekistan, which are like credit cards
Mm,
with a little gold bar inside of them, and they have a QR code, so you can scan for verification. Also, Serbia is buying more gold. Poland is buying more gold. There's so many central banks. This is a little bit, there's so many central banks. This is a little bit, on the background because everybody's looking at Bitcoin right now. But there are so many central banks buying gold and in favor of gold. I mean, the whole of Europe is pro gold. They repatriated gold. Sweden, France, Germany, they upgraded their gold reserves to current wholesale industry standards to make it more liquid. I mean, these central banks are really prepared for to shift to a gold standard if necessary, and because they know that this point will come, if not in 2 years, it will come in 5 or 10 years. And so I'm curious to your what are your thoughts on how this is all going to end? Just some like in the 70s, some high inflation and a lot of pain, or like some other people believe, and I believe too, that there will be some kind of reset necessary, and at that point, the central banks, which are a big part of this world, the central banks have to make a decision on how to reset the system, and the most evenly distributed um, financial asset without counterparty risk among these central banks is gold. So that is a very important thing to keep in mind about gold. But I wanted to ask you, how do you see? Do you think that like a lot of central banks, maybe in the next 10 years, will also buy Bitcoin, like Western central banks, for example?
yeah, I guess on the one and this is like an analogy with the Reformation from 500 years ago. I think that you know Bitcoin induced demonetization is going to continue, which is hyper Bitcoinization. And so Bitcoin is just going to keep gaining steam. And some countries are going to adapt it as, legal tender, or even make it the national currency. And then there's also going to be the counter Reformation, which is the reaction. And I think central bank digital currencies, as much as they're going to wriggle and, you know, kick and scream, they are going to have to you know, um, coalesce or give in to the global demand for actually scarce monetary assets. And so I think they will start using scarce monetary assets to put in their reserves to justify the value, and maybe even convertibility to some extent, to justify the value of their fiat tokens. And so gold makes sense because it's been, it's always, like you said, in Europe, it's always been part of the legal framework. It's right now is the only officially recognized monetary asset that's actually scarce in Europe. So it makes sense that the Counter Reformation, they would start, betting on gold more. But I feel like they would also need to add Bitcoin to the mix, just because the it's staggering how Bitcoin hodling, how it's crushing everything else. And so I think there's this kind of competitive element to it that is going to cause central banks to also add Bitcoin to their reserve and just try and justify, having their own financial system and not just switching to Bitcoin outright. Let me add as a speaker, or I want to ask IBZ first, and then Roberto, you also want to speak. But IBZ, fire away if you have a question.
Hey guys, yeah, I was wondering whether you thought much about rural real estate, which is very different from the kind of real estate that you are discussing. And I mean like a farmhouse, a ranch, forested land, access to fresh water. And this also goes back to your point about skills. Like in case shit goes wrong, you need some skills. And yeah, that's my
Yeah,
question.
that's interesting, and it's always subject of hot debate in preppers, psych circles, and in investment circles alike. My feeling is that as a monetary investment, rural real estate is probably going to go down, because even though, I feel like Jim Rogers has always said, like, oh, during the next depression, the farmers are going to drive around in Rolls Royces, and it'll be. But I feel like I could be wrong, but I feel like he's biased, because he kind of wants that. He wants that city on the hill, promised land, because he comes from a farming family, and of course it makes, who wouldn't want to give the farmers a break? I mean, they've been having such a tough existence for so long. But I don't really see it justified by historic examples. Like, for example, during the Great Depression in the United States, farmland prices went down 30-40% over many years, and they only recovered much later. And if you look at actual farmland output during depressions, usually it declines, and it's kind of for reasons that we're already experiencing. Is you get these shortages all of a sudden. Even now, like, I believe there's strikes happening at Deere, who is the big manufacturer of tractors and farm equipment. And that's on top of an already existing problem where it's hard to get parts from China. So you get all these disruptions that disrupt activities that take place in the rural areas. Of course, eventually, so I think that it's this weird thing where you have to hold different things at the same time. Like, do I think owning like a ranch, if you can afford it, and if it's not a core part, if it's not, the majority of your investment capital, holding maybe like a small ranch, or farm, or wherever you live, so that you have a place to fall back to if there's a crisis that particularly affects maybe the downtown area of cities, or if there's a serious disruption of food, or of electricity and things like that. Yes, I think it could really make sense as a kind of a diversifier, as, like, we just never know what's going to hit us. And I think it could even be very wise. I mean, there's lots of stories of people in Russia or the USSR who kind of survived on their little family farms outside the city, where they would go to supplement their, the because they were standing in bread lines, and there isn't always bread at the end of a bread line. So I feel like it's partly you need to do an analysis of your own country to see how far are we going to go towards, populism, interventionism, socialism, and the further you think it's going to go, the more it would make sense to have some rural real estate, not so much as an investment asset, but just as a resource to directly use. But then again, you probably need some skills as well to work it. Maybe YouTube is a place to start and all that. But I just, it's I don't feel like there's a straightforward answer where, like, yes, do it. It's a great investment, and you can go farming. I feel like it's more nuanced. It's like, no, it's probably not the best investment. Even like if you buy land abroad, you're like, oh yeah, I'll just buy a chunk of land in Brazil, and I can always go there. It's like, well, keep in mind, if times are tough, um, there are many places that will start restricting ownership by foreigners. Like we've seen that in Argentina, and I'm sure South Africa, and many other places. So it's complicated. That's my very long-winded answer, IBZ. um let's Roberto, do you want to jump in and ask or share something?
Hey, so I was listening about like from Jen there. Um, so I'm super bearish on gold at an individual level because if things get bad enough for gold to be useful for the individual level, they will just take it from you. Um, history is full of that. And then, back in the day, it wasn't so easy to fake gold. Now I can go on Alibaba and buy like kilos of fairly reasonably good gold coins and things that will sort of like, um, they're not necessarily going to fool everybody, but they're going to cause the gold exchanging in person to be a nightmare and will increase cost and lower premiums. Um, so I think could be, not like great. I mean, sure, have some, who cares, right? But like, it's not exactly like something you want to hold. It just invites people to try to come and take it from you. Um, Especially if you're in a situation where I think we're going, where it's not necessarily like, shit hit the fan kind of scenario. It's not like there is like zombies running on the streets, but we're going to have tighter times and higher crime. And in cold places, it's going to be a little bit better because it's harder for people who are in harder times to stick around cold places. Now, having moat, right? So having a bit of land to live in, or to escape to, having like the beautiful thing about Bitcoin is that, like, even if you are confronted physically, you can have setups where there simply don't get anything. Or confronted physically, you can have setups where there simply don't get anything. Um, the farming situation is pretty hopeless because farming is extremely hard to do. Most people are like don't understand the amount of effort that goes into it to get very
Mm-hmm.
little out of the land. Maybe having some animals that would totally help. You have like people used to have like a cow for milk, and then at the end of the season you kill it and eat it. You can have some pigs, but seriously, like it's not like there is no romantic version of this. It's not like you buy a little ranch and all of a sudden you and just a couple kids, sort of like your two sort of children, sort of just like farm the land and somehow things happen. And you also have to defend that land too, right? In a situation that we're talking about here. So it's maybe invest in like some secondary properties where the neighbors. It's a bit more like spacious land wise, and there's the horse people near you, there's some farm people near you, but these are not like in any way sort of like investments per se, right? Because there's not going to be anybody to buy this stuff either if we're talking about the scenarios we're talking about. um, I really fail to see anything that is as practical as Bitcoin in these scenarios, where it really is like, like a middle of the way between tough times and truly shit hit the fan. It's not different than like living in Brazil where I grew up. Like, we've always had Citadels in Brazil. It's always been sort of like a life where you drive from your sort of secured condominium to your secured sort of like sports, like where you go do like your country club or whatever, right? And you just sort of like live among like people who are like destituted or having a super hard time, and crime is high. But people in Brazil don't have gold coins, to like sort of trade with each other. They still use the banking system. They still use Bitcoin, and like you could say that life in São Paulo right now or in Rio is like essentially what's going to happen to North America in 20 years from now, where 70% of the population is in a very hard place financially. I just wanted to put that out there. Things are not as simple as people like to think in regards to like gold coins and and farms.
Yeah, I think that's so valuable to hear that, the Latin American perspective. It's like a universe. And Fernando, I want to hear you too, but like to me, it's like this university that is so undervalued. Like there's so much shit that went down there that you can learn from, and to learn what it's actually like and hear it from people that have actually lived it, versus like some veteran who's who loves talking about guns and who like is imagining that you're gonna have your compound and the hordes of zombies are coming, and you like bury your gold coins, and so it's kind of like it's easy to get caught up in your own fantasies versus like, okay, what is this stuff actually going to look like? And I like your remark about the citadels and the gated communities. I think I totally agree. Like, it's not as abstract as people think. Like, this is how life likely is gonna start happening, and we are to some extent gonna have to get rid of this stigma. I think that is, I don't know if it's so much in the U.S., but I feel like in Europe, like a gated community, there really has a stigma of like, oh, you're elitist and you're snooty, and it's because you don't have anything to do with plebs. And it's like, well, that's easy to say if you live in whatever Sweden that is like super low crime and everybody, it's very egalitarian and wealthy. But like, well, what if you throw in 30% unemployment or 40% unemployment? What if you throw in, inflation left and right? Then all of a sudden crime spikes, and then what? Like, are you then, okay with your, giant windows looking out straight into the street? Maybe not.
It's
Anyway,
yeah,
oh
it's
yeah, go
it's
ahead.
funny because like North American homes don't really have any sort of protection against the street,
Oh my
right?
God,
Like
no.
it's
Yeah,
it's like it's absolutely hopeless. There is no position of safety, and just maybe instead of buying the farm, like buy a toy farm, like where you do have moat between you and the street, right? Like you have fences, you have like
right.
just a little bit more sort of like un un an aggressive defense position.
I
And
think
you're also
that's,
not
yeah,
flaunting to the street what you have either, right? It's like people cannot see inside your
exactly.
house,
Yeah.
they can't see inside your property. It's much more unlikely they'll come in. Anyway,
I've seen that several times in Buenos Aires visiting people. It's like your house from the outside looks like a dump, and it's just kind of
that's right.
a wall with some like, not repaired and not really painted very well. And then you go in and it's a beautiful home and it has a wonderful garden, and and it makes sense, right? It's like obfuscation as a defense mechanism, which yeah. And I agree, like, think about, what about like construction quality, what about having depending on your climate, but like having some better insulation so that your home is going to retain the heat or the cold better, or just, I feel like, yeah, like kind of starting from the basics. I used to listen to, I think his name is Fernando Aguirre. He had like this blog about just kind of going into more detail about what life was like in Argentina, especially. So I feel like I picked up a bunch from him, and then also being there. Anyway, I don't want to keep talking. I need to hear, Fernando, if I remember right, didn't you say your family is from either Argentina or Venezuela?
Yeah, that's right. What's up, Tour? From
Hey.
Argentina. Both
Mm,
parents are there. Grew up between Norway and Argentina. So I think, from not only listening to stories of my parents and what the reason why they immigrated in the first place when I was a kid in the late 80s, uh, and also through what happened in 2001, which was the period where my dad eventually immigrated to Spain. I mean, you keep hearing these stories, at least from Argentina, where it's like a multi-generational dumpster fire of a hyperinflationary nature and chronic debt default and just overall fuckery from the way just from the monetary policies from the central bank and stuff like that. You keep hearing these stories, and you want to understand why is this still happening. And I guess that is one of the things that I got uh, sold on Bitcoin when I heard about it the first time. Now, things that NVK is talking about, and the couple of examples that I want to bring to the table, I think is pretty valuable, because when you have countries who historically has just shat on its citizens and done whatever the fuck they wanted to do with their money, the local currency, you can kind of, like, when you put into the perspective of hyperinflationary scenarios, you can look at me and NVK and many more as like aliens that comes from the future to tell you like what the possibilities can be. It can be pretty gnarly. What I wanted to ask everybody about, though, and I'm curious to understand this, is I'm pretty bearish on real estate as a hedge against hyperinflation, to be honest, because I think not only is the exposure that you guys were talking about, right? Like, you are exposed with a very valuable asset that you can't really move around, and people can break in, people can, there's a lot of shit that can be done. But I also think the exposure lies politically as well, and culturally. I mean, you see a lot of hate towards people who own multiple real estates. I live in Vancouver, Canada. There's a lot of hate towards people who own multiple real estate properties. There's people who are getting priced out, who can't afford to buy, et cetera, et cetera. And you can tell the media. I mean, you can just go on the Twitter of Jacobin, for God's sake, and you'll hear, you can feel that tension. And when that tension is brewing up, there's a lot of politicians waiting on the sideline to pick that up and use that to gain more momentum. So I think the exposure lies in so many levels, and it's not really that safe. Also, and this is the question that I want to pose. In Argentina, for example, I think, Tor, you mentioned something about real estate in like areas like San Telmo and Palermo and Buenos Aires only going down 20% against other property markets. I think that's true, but what are you going to do with real estate when your own local currency is hyperinflating? Are you going to sell that for that currency that is hyperinflating, or are you going to sell it for something that is more liquid but can still be used as a currency that is hyperinflating? Or are you going to sell it for something that is more liquid but can still be used as a currency? In Argentina, you see a lot of these properties, they are sold for US dollars. They're not
Oh yeah.
sold for Argentine pesos. And the thing is about the liquidity of the US dollar in Argentina is shit. Like, if you're a regular salary person trying to save money, you can only exchange 200 US dollars a month for your Argentine pesos. You're stuck with Argentine pesos. Apart from that, you need to go underground if you want more than 200 a month. So it's not a real liquid market out there, because it is priced in a stronger currency. So as a hedge for hyperinflation of your local currency, I really don't see real estate as something really solid. There's really no liquidity there. So was wondering what your thoughts are on that.
I completely agree with everything you said. Yeah, really. I mean, like, oh, and by the way, that was something that really struck me in Argentina, is the how extensive the informal economy is, with even just to exchange money. What are they called? The arbolitos. They call them like little. It's like little trees. I think it's like the idea is they're it's like a little hole in the wall, illegal place where you go to
It's
exchange
called cuevas.
cash. Ah, cuerva, like the caves,
Cueva, yeah,
right?
like caves,
Oh,
underground caves.
oh, interesting. I don't know where I got the arbolitos from, but yeah, I mean, but it's kind of like that's all good and well for small amounts, but then like, what if you're talking larger amounts? Yeah, I mean, I think you're right. It's like once you start thinking about the actual mechanics, it's like, oh, but like, the real estate system, in fact, is incredibly interwoven with the national currency system. And so if the national currency goes haywire, you can be locked in kind of in experiences that you didn't see coming. At least that's what I'm hearing you say.
Yeah, no, definitely, and it only really opens up a very, like, a sideways market where you trade you basically trade the paper of owning a property, but not necessarily for cash, for other things. You just go to a notary to fix the papers, but it's not really like straightforward. It's not like cash or rehypothecating a mortgage or something like that. It's just like, okay, I'll trade you. It's like a barter system, but it's not fungible at all. So it's very improvised and very, yeah, it's not. It's very exclusive. You don't really have an open market where a lot of participants have the ability to come in and bid or take part of it. It's just it doesn't really make sense at all.
Wow. Yeah, and I also I remember now the perspective from the homeowner. It's like it's kind of like tragic and funny at the same time. For like if you come from a country with a more stable currency, is that if you own a home and you rent it out, it's like, oh yeah, I'm the landlord. But weirdly, you're like you're in a kind of a submissive position towards your tenant because you sign contracts for this is the rent, but because of the inflation, you have to keep kind of try and nicely ask them if they're willing to pay more. Like you keep having to raise the rent, and they have to be, okay, you can't push it too far, or you might lose your tenant, have to change it. And these are all complications that people, I think, don't realize are there. Because the context is normal markets.
You start to see that a lot in Europe as well. To be honest, a lot of laws overprotecting the tenant, and not only for prices but also for the availability. Like they're
Oh
forcing you to
yeah,
rent. You can't really have anything empty. And let's not even talk about in certain areas. I have a lot of good friends in Barcelona. You have a lot of so-called ocupas who come and just squat your house if it's empty for like 2 days, and good luck trying to get them out as well. It's just, oh man, I'm 100% in on Bitcoin. Everything else looks so sad to me. I
yeah.
wouldn't
Like
even
no,
You
bother.
know,
nobody's gonna come squat inside your Bitcoin wallet. I mean, it's just gonna be pristine and clean and exactly how you want it. Versus, yeah, man, like imagine some strangers coming to live
well,
in your house.
look at the like in Canada during the this COVID situation, the lockdowns and stuff. They essentially blocked evictions, right? So you had a ton of people not paying rent, and you have absolutely no recourse. And this is not a country that you can stand your ground either, right? So it's like essentially like you just shit out of luck, right? Yeah, like real estate is not a good investment in the way that people think it is. Maybe 50 years sort of time horizon, 100 years, that's a different story, right? Maybe your heirs will figure out a way of selling for a lot, but you don't want to be stuck with that in a sort of double, triple decade situation because you might not be able to sell it.
Yep, good points. I'm seeing a number of speaking requests, so I want to like make sure people can get in with their questions. So I'll let's kick up the pace a little bit in terms of the Q&A. So
I'll put
uh,
myself down. Good talking to you, Tor. Speak
oh,
soon.
okay, sounds good. Bye, Fernando. So wages to freedom. Go ahead.
Hey, Tor, thanks for having me up here. I really respect you as somebody who has a lot of knowledge across lots of different domains. So thanks again for having me up here. I'm personally an investor in Bitcoin, real estate, traditional equities. Bitcoin's starting to become the largest position in my total portfolio, but I think just to play a little bit of devil's advocate, I think real estate, the people who really know how to invest in it, um, they do have kind of a unique advantage of being able to buy properties in many ways that almost for free. If you look at things like, buy, renovate, repair, refinance, repeat, this sort of BRRRR strategy, um, people who are really into real estate, they're buying these properties uh, with quick cash or taking quick loans, and then they're renovating the properties, refinancing, pulling all the cash out, and essentially, if you look at their ROI, it's basically infinite. They're getting the
Mm-hmm.
properties for free and just getting that debt, and so it's really just a debt game. And I think not everybody understands this yet, but I think more people in the coming years are going to understand this and get more and more into real estate. Um, so in my mind, I just wanted to ask kind of from that perspective, if you think about people who know about some of these strategies, uh, do you really think that real estate wouldn't be a good investment for people like that?
Yeah, I think it's like I completely agree with what you're saying. You know, like there's the way to make money in real estate is just you know, leverage upon leverage, and once you know the ins and outs, it can be extremely lucrative. Like you say, like kind of unlimited upside. Um, and and I think, well, I could be totally wrong. I could be totally wrong, but I think we're late in that game. Like I remember going to like a rich dad poor dad workshop in the Netherlands back in 2006, I think. And of course there's been way before that, but I feel like, you know, Robert Kiyosaki was like one of the first to really, you know, popularize these concepts for the masses. And so I feel like, yeah, maybe in the 80s, 90s, it was very, very obscure and unknown, and some people made a complete killing because they were exploiting these strategies that other people weren't aware of yet. But I don't know. I feel like in the last 10 years, like, isn't this common knowledge? And isn't it also why there's so much resentment growing towards real estate owners, because it's kind of, you know, people can't always put their finger on exactly how, but it's kind of like, well, you're the reason why I'm getting kicked out of my home, or why I have to move to, you know, a rural area where I can afford the, you know, or have a super long commute to work, because I need to be able to afford my place, because you guys have been bidding us out of the market with money that's not even yours. So I'm not saying it's immoral to, you know, to play that game, but I do think there's going to be a limit to it. I don't know when exactly. I just feel like, man, you know, Bitcoin is such a black hole of monetary energy that it's like why would I unless maybe it's different if you have like a strong source of fiat denominated income, if you have a steady, you know, a steady supply of fiat money, wage, you know, of course, or some kind of other cash flow generating thing, then you go to the bank and you get incredible mortgages, 30 years out, fixed, you know, fixed interest rates. Um, you know, then of course it's a lot more tempting to start playing that real estate game. Anyway, just a long way of saying I feel like we're late in that game. It's a lot more tempting to start playing that real estate game. Anyway, just a long way of saying I feel like we're late in that game.
Yeah,
Yeah,
I
Um,
hear you.
I would
um,
agree that
oh yeah,
the
Jan,
thing
go ahead.
the thing you talked about is a pretty clear sign of a bubble, I think, and it has been played again, or before in the last cycle, and it's very active again now. But can I ask you a question about Bitcoin, Tuur, about something I was thinking
Sure.
um, about the security of Bitcoin, and it is like in 20 years, I believe very little new Bitcoins are mined, right? I mean, it's not over. That's in
Correct.
2040 or something, but in 20 years, almost no, very little new Bitcoins are being mined, right? So, but then, and the transactions per second will stay at 5, or is it going to be increased in the layer one?
Thereabouts. No, I think it'll in layer one it'll be pretty much, you know,
Yeah.
steady.
So if very little new bitcoins are being mined, the miners all have to get paid through the transaction fees. So either the transaction fees are going to be very high, or the hash rate will drop significantly. Am I correct?
Transaction fees go very high, or the hash rate will drop. I feel like that's correct.
Right. So okay. So but then
Well, relative hash,
one.
maybe the growth of the hash rate will slow down. I mean, because we also have technology improvements to take into account.
Yeah, but how much would you know that it would be like a balance between the hash rate and transaction fees, and I mean how much can a transaction fee be before people say, well, it's just impossible. Yeah, I mean, everybody can use the lightning network, of course, but you know, for normal transactions on the layer one, they still have to be there. And
Well, I think I
if
hear what
those
you're
are.
getting at.
Hmm?
I think I hear what you're getting at. Let me try and rephrase it. So, is your question, about sustainability. If the block rewards slowly go to zero, are fees going to be enough to keep securing the Bitcoin network? Like, is that kind of your question?
Yeah, that's exactly it. Yeah, because I would think that by then, in the not so distant future, yeah, it's 20 years. The hash rate will drop significantly, actually, and also this is probably all been read and said about, but what about quantum computing? So if the hash rate drops, what about the security of the blockchain, and is quantum computing a threat?
Yeah, I'll leave I mean, quantum computing, I'm definitely no expert, but everything I'm hearing is that, first of all, there is already a moat. If they do come up with quantum computing, there's specific addresses you can park your Bitcoin in that are much more quantum resistant than others. So there's and also soft forks are a possibility. And then on top of that, it's not even that close at all. Like, it could be 20, 30 or more years before quantum computing is actually a thing that is even remotely applicable to Bitcoin. But so your first question, there's people that have done some better work on this. Like, I feel like my thoughts are more like from the gut about whether transaction fees will be enough to cover for security costs. I feel like because Bitcoin is a layered architecture, the market is going to figure out a way to balance transaction fees on the main layer and how much value and activity happens on layers like Liquid or Lightning Network or other side chains. And so I'm not worried. Like, if the fees get, quote unquote, too high on the main network, that's okay, because it's just a wholesale market. Like, retail people are not going to be transacting on the main chain at all in 20, 40 years from now. That is just not, that's not meant to scale. The only thing is it's meant to produce security. So, and then, is it robust enough? I think as long as Bitcoin is the most secure network in the world, there will be enough hash rate to secure it. I need to think about it more, and I can't really go in more depth right now. But I'm trying to, maybe some people in the audience will know, but I think maybe Nick Carter or some other people have done some good research on kind of speculating 10, 20 years ahead, what where we're going to be. In short, like, I'm not worried, but I don't know if what I just said was enough to convince anyone that you shouldn't be worried.
Yeah,
Let me.
we have a lot
Oh, sorry.
of people in here. Maybe somebody
Yeah.
wants to give their opinion.
Well, I'll leave that open. If anyone wants to comment later on, because I'm kind of like only sparsely approving speakers. But if people have thoughts later on, feel, because I don't want to make it too technical. I wanted to make it a bit more, investing focused. But feel free to to speak up if you have thoughts. Next speaker is Caramelcina, IOU. You go ahead.
You
Maybe.
have
Hello?
to unmute.
Oh,
IOU.
yeah. Let me.
Yeah.
Well.
Hi.
Oh, yeah.
Hi, everybody.
Hi.
Well, all I can say is that I probably could be your mothers. I'm way past my 50s, and I discovered blockchain technology and cryptocurrency later on, of course. And I have to say that in my heart, I feel it's the future. I have involved probably all my family into it to invest, to buy, and not just Bitcoin, but other coins that have utility and future and strong projects behind them. And regarding real estate, of what I heard earlier, I believe in real estate, of course. I mean, everybody needs a place to live. People use it to make money and to invest and to pass on wealth. But I think everything is changing, and we're moving into a sort of a electric galactic type of living. And I believe that this is the future, and the younger you are and you invest in it, the better. I wish I had been in it 2013 and 14 Unfortunately, I got into a little bit late, but I understand the technology behind it, and that's I really don't have any questions. I just very happy that this exists, this platform, and you all guys have something to add. But from like an older person, I truly believe that this is the future, and the earlier you get into it, the better.
Thanks so much for sharing. I really appreciate you chipping in and sharing your thoughts. And yeah, I'm so glad you feel welcome, and feel free to keep hanging around. And I'm sure we'll talk more later. Thanks for your thoughts.
Thank you.
So next we have Hodler Tom. Feel free to speak up. Hello, Hodler Tom.
Hi, Tor. Hi, everyone. I'm Tom from Argentina. I just wanted to thank you all for the content. I got to know you in Preston Fish podcast, and I thought you were fascinating, so I started following you a couple months ago.
Oh, cool.
I had a comment regarding the security issue that John asked. I think we should also take into account the Moore's law. So these ASICs will be more efficient as time passes. So it won't be necessary to have as many ASICs to back up that many terahashes, right? So the costs will be also less as time goes on, and I think they will reach an equilibrium point where the costs are not so big, so they can if they reach if they gain some Bitcoin out of it, it will make sense for their costs. What do you think?
Yeah, no, I think that makes sense. Moore's law is going to keep doing its thing, and so I think the actual hash rate is not gonna diminish very much over time. Also, I think you have to keep in mind that miners are. We've seen that with the China shutdowns to crack down on mining, is that miners are extremely mobile, and so I guess the way I visualize it is that Bitcoin mining, the machines are or the companies. It's kind of like the hash rate is like water, and it goes to the lowest places, which is where the electricity is cheapest, and then it settles down there and it builds networks and ecosystems and alliances of companies and so on. And I think that is really the strength and the backbone of Bitcoin, is like it goes to the lowest electricity price all around the world, and so it starts to own that band, like whatever it is, like the top 1% cheapest electricity or 2%, that's where all the hash rate will settle. And so that means that almost, well, that it becomes very hard to attack it, because you are gonna, as a rogue attacker, you're not gonna be as connected and as efficient and as streamlined as those miners who've been, doing it for years and years and years, and you therefore are gonna have a very low likelihood of succeeding, even if, maybe if Jan's concern is true, that like, oh, block rewards are now down to like, one, I don't know, say 1 Bitcoin per 10 minute, or probably even lower. Like we're talking about, a few thousand Satoshi even, or something like something very low. That still, the Bitcoin mining network overall, with the fees and with that mechanism of like finding the lowest electricity prices, I think is still going to be very robust.
Well, I think that a requirement, but it looks to be all happening from the playbook. That the Bitcoin price just has to be very, very high by the time this becomes an issue, because if the price in 20 years is like 500,000 or a million per Bitcoin. English is terrible today. Then of course it's not a problem to. Then of course you still get a lot of money for mining very few Bitcoins, and it's no problem to pay the transaction fees.
We have
Yeah, exactly.
oh,
Number
sorry,
number go up
interrupt you.
technology at its finest.
Yeah.
Right. We
Yeah,
we have a minor in
and
our midst. I wanna ask Gideon just for your thoughts on what we're talking about.
yeah, I wanted to make a second question about real estate. Um, because
Sure.
here in Argentina we have such low density, like population density. So now that we can work from our homes and we can live anywhere, the costs of properties are decreasing in dollar terms. So and also because of our devaluation of our currency. Um,
Well, can
how
you
do you
clar
see?
can you clarify? Is it like why can you live anywhere? Is it because the internet is everywhere, or like what?
Oh yeah,
What?
because you can get like good connection
Mm,
almost everywhere in the country. It's a big country, so not in every province, but in most of the provinces, and most of the population is well in two or three cities, I would say. Um, but I think that trend will change. It will decentralize more, and well, if so, and you invest in real estate in these cities, it won't be a good investment, in my opinion. And do you see that trend also happening in Europe or the US or other
I
countries?
Yeah, I'm no expert, but I feel like I see that. Like I absolutely see that how, especially with the pandemic, it's only accelerated. Like, the in the US you have the rush out of cities like San Francisco, New York, and they go
Yeah,
settle, in Nashville, Austin, Denver, all these smaller cities. But also, from the downtown area, people are more moving outside. I think a lot of that has to do with the internet being more ubiquitously available and with companies being okay with remote work. Yeah, I feel like, that's what you're talking about is true internationally as well. Gideon, did you want to chip in about the mining? What we're talking about the fees?
Um, I'm not an expert on fees, but I've recently heard the analogy of Bitcoin miners, this water example of wherever the lowest cost energy is where the miners will go, and really some of the Chinese miners that I met that really drove that home. And one, it was just incredibly fun to speak to them because we've been on different continents, and a few of us has interacted on Twitter, but when you really meet someone from a different country, if they're a Bitcoiner, we all came to Bitcoin for very similar reasons and just kind of the ideas of freedom. But I just love that example, and I totally
Well,
agree with the real estate example as well. I think all real estate is going to be changing, and because of communication and transportation of technologies, all real estate is really going to be shifting in the future to where who embraces the principles of freedom and individual liberty.
maybe there's going to be some Citadels in West Texas then.
There really are. I mean, that's just going to happen, and there's already some charter cities that are being discussed both in Texas and some other states, and then internationally. And I think one of the I don't have a perfect answer, but I think one of the questions we'll need to answer is: do we build the citadels in areas with stable governments, such as the United States, and to where you have to work within the confines of the law? Or do you approach other nation states, undeveloped nations, and carve out kind of special zones that operate, more autonomously, similar to Hong Kong, which is not as good anymore, or other regions. But I'm really excited, and that's already happening. And there's a few in Texas that I've heard of.
Yeah, and like I like the term startup cities. I feel like there's a lot of because there's a lot of enthusiasm about unbundling old, technologies, old institutions, and kind of like and Silicon Valley startups have done a lot of that. And my friend Zach has been doing a lot of work on startup cities as a concept, and I really like it because it's not as it doesn't sound as offensive to people that have more liberal leanings. It's like, it's just a way to allow for more innovation, and it's like, why not allow people, to innovate on the kind of political layer as well. Yeah, and so like the cities you're talking about, fit that picture. And of course, historically, like Europe was, and the US was a patchwork of startup cities. Like everybody was just trying different things. So yeah, let's have more of that.
Yeah, I think that's what I'm probably. I mean, I'm absolutely thrilled with the energy innovation that's taking place, which will kind of lay a good foundation for a lot of these charter cities. But really, when you look at the disagreements across society, we all generally lean towards wanting the same thing, what's best for us and, our vision of the world. But the disagreement, comes about in the execution of those visions. And I think if we allow a more decentralized future to where startup cities and charter cities can organize around their own principles. I mean, even everyone on this call probably has slightly different principles and slightly different opinions on what should be codified into law versus what should be left up to the free market. So anyway, I'm just incredibly thrilled. I mean, that's going to take time, but another thing Bitcoin mining solves is the chicken and the egg. I mean, we're going to, historically all cities or the largest were in the ports, and then, all those sprang up. You saw London, you saw, the Eastern United States spring up. And then it was, okay, well, where the railroads stop? And that's where innovation happened and cities flourished. And then it was, where were the big airports? Where did those happen? And now, because of, more decentralized flights and communication channels and technology, I think that innovation and decentralization of where humans want to live is going to go, much, much further.
Yeah, I agree. It's so it's just so exciting. It's almost and I think you're right. I think that you know you can almost think of it as in like protocol layers. Like maybe on the layer of the base protocol, which is like whatever, a continent or something, the basis is like we need the ability to agree to disagree, right? If somebody wants to start uh, whatever Bitcoin maximalist city and somebody else wants Etherville and somebody else wants a little communist community, like they should all be able to do that, to have that like freedom of expression. And then you end up, of course, with beliefs that are like, well, on a federal level or on a large scale, we just really want that decentralization. We want the free, allow people the freedom to innovate and experiment rather than get locked into a monopolistic, totalitarian kind of stringent system.
Yeah, and
Yeah,
I think we didn't see that before because in the last decades, well, capital was tied to the land. So a factory, let's say, or just some fields to crop, to harvest. And now you can see capital. Well, I work in Argentina for a bank in London, for example, and I'm not even in Buenos Aires, the capital.
Wow.
So the capital. So I see that you can even earn money from another country without. Well, I also have like a gig for an exchange from Singapore, and I earn my salary in Bitcoin. So in that case, I don't even have to pay taxes on it because it's not even anywhere.
That
Yeah.
That's fantastic, Hodler Tom. You truly live in the future. Let's hope this future is gonna be accessible to more and more people.
Yeah, I
well,
hope
and
so.
I think what he speaks to is something that's really, really important, which is the democratization of finance and access to capital.
Mm-hmm.
And irrespective of crypto, over the last, several thousand years, those that had the capital, have obviously made the rules and really run society in a top-down fashion. And we've been democratizing finance through venture capital and private equity over the last few decades at a really accelerated rate. And because of increased communication channels, anyone really can go out and raise capital. And I think with Bitcoin, we take that to where we take it out of the traditional finance system to where anyone globally has access. If you have and this is something that the ICOs really highlighted, maybe in a a little bubble fashion, but if you had an idea, you could get that funded seamlessly. And I think everyone's lived where other people lived and kind of they grew up, but I think moving forward, it's what's your North Star in your life, and do you want to be in a beautiful scenery with people who share your values? Like that's very real now, and you don't have to live in a a center of commerce if that commerce is now digitally native.
And they can't confiscate
Absolutely.
your money. So that's also a great strength. You can it's portable and not confiscable. So they can't take it from you. and you can just move to the country or state that you align the values with.
Absolutely, absolutely. Real, not only financial free speech, but kind of like a, financial sovereignty. Really, like you can be your own
Yeah.
sovereign nowadays. Let me switch to some other speaking requests. We have Paper Chaser. Go ahead.
Yeah, hi Tor. Thanks for doing this. So, my question is, do you think that Bitcoin can get too much hash power? Like, how much is enough?
Oh, but can you just specify your concern? Like, too much? Like, what
Yeah,
is your
yeah, yeah.
concern?
Because
Is it like,
the
yeah.
regulators are always saying like, oh, Bitcoin is consuming too much energy. Like, at what point will Bitcoin be secure enough that no entity will be able to attack it? How much of the new hash power is it supposed to capture every year?
That's
Uh,
I guess an interesting. I would say like I want to hear Gideon your thoughts, but I would say d does it does it really matter if it keeps growing or not? Like, it's just gonna take what the market is, willing to pay for security, and it's gonna invest that in the cheapest available electricity around the world, and which means probably by definition very renewable uh, types of energy. I don't know, Gideon, you have thoughts?
Yeah, we discussed this last night, and I think that there's a narrative and just kind of a philosophical question. Like, I don't believe energy use is bad at all. Like, I think if you leave your house, you should turn your lights off and you should do what you can to conserve resources. That's kind of a sustainability approach that I think everybody should take. But at the same time, if you look back at history, there's a very clear correlation to human prosperity and the amount per capita consumption of energy. And so I think that, if you look at all the narratives out there, it's like, oh, Bitcoin consumes too much power. Well, I think that's a great thing because that ushers in new energy innovation, and that's just resources being pointed towards something that is absolutely correlated to human prosperity. So I think, if your questions around energy, I personally, like, my philosophical worldview is really informed by Julian Simon and kind of the cornucopian economics of, the ultimate resource is the human mind, and the more resources we can put towards, both stabilizing grids and ensuring reliable and affordable power in developed nations, and additionally incubating reliable and affordable power in undeveloped nations. And so I think, like, I think it's naive and really just completely foolish to think we can lower the energy consumption globally. Like, we have to think orders of magnitude ahead where we're bringing these undeveloped nations. And it's really just disingenuous and selfish. Like, I heard one person on Twitter say, well, I'd rather be poor than own oil stocks. Like, I think that's just an incredibly privileged and naive and arrogant thing to say. Like, we live in some of the most developed and privileged societies, and we need to point resources to elevating human prosperity in undeveloped nations globally.
Yeah, that's so interesting that like people, I mean, I guess from growing up and learning about maybe like, carbon as a source of fuel, that we kind of think of energy as this finite resource that we can deplete. But really, if you think about the essence of energy is like, well, it's one of the universal laws is conservation of energy. And so the only thing that really happens is you convert energy from a certain state into another type of energy, and then some energy, dissolves as entropy or converts as entropy, and other energy we can utilize for ourselves. And so it's kind of like, yeah, like you say, this cornucopia idea of like, man, like society, the more energy we can put to use in an orderly fashion, the better. It's kind of like our report card as a society is like, oh my God, like we're able to, create this much energy on a global level. And even if you think about, and this is maybe controversial, but to say so, but if you think about, carbon based or hydrocarbons, basically maybe like animal and plant life that died and then, became part of the Earth's crust, and then we can mine that as oil and gas and coal. If you look at that, in a way, you're like, oh, but we're using it all up, and so now it's gone. Well, I could be wrong, but it seems to me that the carbon that goes into the atmosphere, that is being then absorbed by animal and plant life that's alive. Like it's a source of energy. This carbon monoxide and carbon dioxide, and I think we're already seeing the last 100 years, like Europe has been greening, like the world has been greening. We're seeing more plant life on a biomass basis than there was 100 years ago, and that's because I think of the use of fossil fuels. So I'm not saying that like, oh, this totally offsets any and all problems that have been caused by mining hydrocarbons, but at least it's like showing that we're converting energy rather than just consuming it and throwing it in the garbage, so to speak.
Yeah, and I think you bring up a good point. I'm very comfortable saying we will never run out of oil molecules. We will never run out of copper molecules. We could run out of the economic amount of those
Hmm.
molecules. And so, really, again, going back to cornucopian economics, you know, every time the price of something goes up, like when oil went up in 2007 and peaked at $147 a barrel, that said two things. One, compete with oil and use something else and lower its need, or two, find more of that resource. And there was a combination of both going over the last 20 years. And so really it's the same thing. Power has been controlled by governments effectively, and there's been very little innovation. And so with Bitcoin mining, it ushers in and it's freed up anyone in the world can now has a profit motive to create a better energy source. And whatever your opinion and vision of the world, you're now freed up to innovate on that level. And so again, I totally agree. We will never run out of energy, but we need to be thinking orders of magnitude and like, hey, like kind of from a first principles. And that's what Bitcoin does. It frees our minds and gives us, the profit motive to really innovate. And this is going to benefit, and it's already benefiting all of society. And another thing I try to do is I separate the CO2 good bad question from the energy use. I mean, I think if you go back in history, anyone who says like, oh, the world, renewable energy has to work, or that global warming is going to end the society and there's nothing we can do outside of give the government more money, is just really naive to history. Because obviously if you look back, the whales were going extinct, and then some guy invented kerosene, and lo and behold, that saved the whales. And so it wasn't out of the goodness of his heart. That person was John Rockefeller. He developed through chemistry and innovation a profit motive to save the whales. That wasn't his North Star, but it certainly was nice. And same thing with Europe. I mean, Europe was deforesting. They were designing boats to bring more wood from the New World, and then coal was discovered, and that saved the forest. So I think there are all these externalities that matter, but to say that we've never, as a society and as a globe, we've never approached anything like global warming is just naive. Like, we are innovators, and there are some amazing technologies if CO2 is a concern that Bitcoin mining helps scale. So it's going to be really awesome in the coming decade when we see the oil companies' capabilities pointed towards energy innovation that is carbon neutral.
Yeah, yeah, yeah. I mean, the whole energy debate is, and I don't want to, you know, go on about it too long because we want to stay focused on investing. But like it's just the more I dig into it, the more it's like, man, it's it's full of this counterintuitive stuff where you're just like, oh my God, like like literally the opposite is true of what I thought was true, or like the externality is all is instead of incredibly negative is actually incredibly positive in many ways. It reminds me of this joke from, I think it was like The Daily Show or something, that like, if you want to save the panda, we got to start eating panda meat. We got to start, because then people are going to be incentivized to start panda farms, and they're going to breed them, and they'll be as ubiquitous as maybe cows or chickens, and that's how you save the panda. It's like, it's a joke, obviously, but it's kind of true, right? I mean, like bisons are probably saved from extinction because you can buy their meat in the supermarket now. Anyway, let me what paper. I think Paper Chaser, you had your question, right? Did you have another
Yeah,
question,
yeah.
or was that
No,
it?
I'm good. Thank you. Interesting times
Okay.
ahead.
Yep. Thanks for speaking up. So we have next. I hope this thing shows me the speaker requests in order? Because if not, I apologize for approving people that have been waiting. Next, I have Money and Honor, MO. Feel free to speak up. Let's see if...
Hey, did you call me?
Yeah, that's you.
Hey, Tour. Thanks for your time. I've gotten a lot from your podcast appearances, and thanks a lot for those. My question was, what do you make of Jack Dorsey's tweet yesterday? Hyperinflation is going to change everything. It's happening. As a public company
Yeah.
CEO, two public companies, I kind of take those comments pretty seriously to just put it out there. And what do you make of that?
Yeah, oh, and by the way, before I continue, several people have thanked me or acknowledged me, or appreciated the work that I've done. Like, I really appreciate hearing that stuff. Like, it's amazing, it moves me. It's just so exciting that actually, whatever my shit posts and all that stuff, that it actually affects people. And I just hugely appreciate, the appreciation, the shout outs. I guess it's just for the sake of this conversation that I more try to focus on the question so that we can make this conversation valuable. But anyway, I just always hugely appreciate that kind of feedback. And if it's negative, I want to hear it too. And now I lost my thread of thought. Could you remind me? Sorry, Mo. What were we talking about?
Yeah, Jack Dorsey's tweet
Oh,
on.
Jack Dorsey. Yeah. Somebody, let's see if we can pull up the actual tweet. Let me look it up. Jack, where are you? Dorsey. Jack.
I can
Okay,
read
it's
it if
probably
you want.
one of his most. Oh yeah. Wait, I have it here. Yeah. He said 18 hours ago, hyperinflation is going to change everything. It's happening. And then actually, I remember somebody followed up with a question to him, and I think basically Jack confirmed that he was talking about yeah, exactly. Somebody said, yup, we live with this built in our mental models in Nigeria. Inflation is currently 16%. And then Jack responded to that saying it will happen in the US soon, and so the world. So he's definitely talking about US dollar hyperinflation. And I think you're right. I mean, I retweeted it because it's such a huge thing to say for, the CEO of one of the most influential companies in the world. And it makes you wonder, like, what kind of conversations is he having? Is he talking to Peter Thiel and whoever else? Where does this come from? Why does he feel a need to just share it? Of course, it probably ties into, why he's excited about Bitcoin also. But I also feel like he's kind of signaling an awareness that I think is going to become more ubiquitous. And to me, that moment was like, I can't speak for him, obviously, but like the kind of like, oh my God, it's happening, like that kind of feeling came when they did the massive QE bailouts, or the stimulus packages with the pandemic in March 2020, and the stock markets tanked, and they did this crazy stimulus package. That's when I thought, like, oh my God, this is like France in the 1790s. Like, this is the beginning. This is when there's just stimulus after stimulus, and people stop questioning the stimulus. Versus 2008, at least in 2008, there were like a whole bunch of people that were like, this is crazy. What are we doing? Questioning the concept of the stimulus and the bailouts. And that now that has changed entirely. The only debate is about how much stimulus, how fast. Um, and so I feel like he's onto something. Like, I don't know if it doesn't really matter, I guess, technically, if he's correct, because hyperinflation is the first person, I think, who coined the term, defined hyperinflation as the currency devalues by more than 50% per month. So that means that basically on a yearly basis, we're talking about 95% crash, or probably more, because you get like crashes of more than 50% 12 months in a row. And by the way, there's some research about the nature of hyperinflations. I think the IMF has a few papers about that. And I think I remember that in developing countries, if they have hyperinflation there, it usually lasts between, I think it's like 3 and 5 years, or either that or 2 and 4 years, something like that. And if they happen in the West, they're usually shorter. They usually happen for about, I think it was like 1 to 2.5 years or something like that. So it's just something that I always try to keep in mind is like, like the joke is like, yeah, inflation is transitory. Like, no, like inflation is not transitory. But if we do have hyperinflation, that will be temporary because you just can't, the market needs a currency, and so if the currency is being destroyed, the market just switches to an alternative that does work, and then finally the government has to just kind of cave in and give the people something better than they had before. But so yeah, I mean these are just some thoughts on what this means. I wonder if more and more macro guys and more CEOs will follow, if not with words, then maybe with their actions. I mean, if more and more top 100 companies start thinking this way, think about what they'll do with their treasuries. Like, they're going to pile into Bitcoin. It's just going to be a wall of money coming into Bitcoin. So anyway, just some thoughts.
Yeah, and
On that note, one more thing is, Jack's pretty influential. He's pretty close with like someone like Jay-Z, another billionaire. I mean, they're pretty influential people, can kind of change the public sentiment just with a few tweets or some kind of public appearance. How many of those do we need before it's kind of like a mass exodus? Do you see it as a mass exodus, or do you see a slow, gradual thing? Obviously, the price goes up pretty fast, but does the collapse of fiat happen slow, gradually, or all of a sudden?
I think that I've been wondering if this is kind of the jubilee. No, I forget. No, I think they called it the miracle year. So in the you know um, sorry, I'm going back 500 years, but like in the 1500s, printing press was invented. Little pamphlets were just, flooding the European cities. It was just so easy to get your hands on quickly printed things, and so that's why Luther's 95 Theses became so widespread so quickly. And so basically, people were protesting the monopoly of the Catholic Church, and they started doing Protestant masses and speeches in the forests, in the city streets, and eventually they became so bold that in several cities they just were preaching inside the Catholic Church. They were just Protestant priests, and people just were going nuts. They just loved it. It was the new thing, and then came the counter reaction. I think it was 15. I need to look it up. The 1560s somewhere. I think 67 or something, maybe a bit later, was what they call the miracle year. It's like when all these things were happening, and it was as if it was a done deal. It was as if Protestantism had won in several countries, and then came the reaction, which is basically Spain sent the largest army of the day. Spain was the largest power. It was kind of like the equivalent of the United States. It was the most powerful nation, and they just sent a giant army to Flanders, and basically things got really rough. And so I feel like so far, not to be fear mongery, but I feel like so far the reactions of government has been kind of inertia. It's been kind of tolerant. It's been quite tepid. We haven't seen them panic yet. And so I wonder if Bitcoin makes a move now and we go 5x or 10x from now, we're talking like $10 trillion Bitcoin. If probably not all around the world, but like in some countries, we'll see something kind of more scary than what we've seen so far. That's just a concern that I have, and I don't think it will necessarily destroy the price or something, but I just think that for running a business, for example, because people always say like, oh, Bitcoin is indestructible. It's of course true, but they can slow down its adoption by cracking down on corporate adoption of Bitcoin. So that's just something that I don't assign an extremely high likelihood to, like not more than 50%, but it's definitely in my back pocket as like things that I worry about, as scenarios to keep in mind. Let me plug in
Yeah, and while
another
you're
question.
one thing I love
Oh yeah,
about
go ahead, Paul.
Bitcoin Tur and everybody is
Yeah.
I've always been, or not always, when I started reading in 2011 about Ron Paul's works and the Fed, I started getting concerned about inflation and how it really hurts the most disadvantaged in society. And I think that's what I love about Bitcoin is it's brought this really group of people together who are now friends on the internet who have a voice. And I think, Jack Dorsey's playing a critical role. People like Jay-Z are critical, but I think there's also a responsibility to all of us to respectfully engage others that inflation hurts. And it's really hard to tell like a single mother with 2 kids, hey, inflation's the worst thing ever. But really framing that and respectfully to get everybody across society engaged in this subject, which I consider, fix the money, fix the world. And so again, the Bitcoin and the narrative around this is critical to bringing more people to this voice.
Here. Kenneth, you are on. Kenneth Kuselis. I hope I pronounced that right. Oh, wait, I am trying to add you.
Yeah, thank you. I really appreciate this. Just a couple quick comments. First of all, if you have hyperinflation at 50% per month, at the end of the year, your $100 will only be worth 2.4 cents. So that's pretty powerful. But
Wow.
just one comment I wanted to make. Michael Saylor's always talking about everybody taking 40 hours and doing their own research on Bitcoin. And when I first got into cryptocurrency, we'll call it, in 2017, I didn't spend that 40 hours. And I was on things like this, just listening for what should I buy? When should I buy? When should I sell? But I didn't put any of the research in, and I got hurt pretty hard. And so now, looking at the title of this, investing in gold, Bitcoin, and real estate, if you spend 40 hours just looking at charts and history of just the last decade, I might, and this isn't financial advice, but I might say sell gold, hold real estate, and buy Bitcoin. And I was just curious what your thoughts are on that.
Yeah, well, wait, say that again. Sell gold, hold real estate, and buy Bitcoin.
Yes.
Right. It's kind of like, it reminds me of like the investment banks, like they have their their advice, their rating is like sell, hold, or buy. Yeah. Um, well, I mean, I would say it depends on your allocation. Like if if you're starting from scratch and let's say you have an inheritance or something, and so it's kind of like you have to invest, you're in all cash or something like that. Um, yeah, I don't know. It's like hold real estate. I don't know. Like I I mean personally, logically, Bitcoin makes the most sense to me, even in because I feel like I think who was that Stevenson who said like we chopped off the tail because like when people invest they always worried about the tail risk, and the risk is that 51% attack for Bitcoin or like some kind of critical bug or and so I agree that it's been this is the CEO of NIDEG I'm talking about. So his argument is like it's been 11 years. Basically, Bitcoin has been stress tested, and so the risk is gone. The fundamental long tail risk of an existential, you know, act of disappearance. And so personally, I'm comfortable to be very invested in Bitcoin. But I think it is probably correlated with the amount of research that you put in, which of course you have to be careful about, survivor's bias, and you think you're a genius because this thing keeps going up, and so you stop playing devil's advocate and things like that. But so yeah, I feel curious, Kenneth, if you want to like just share a bit more at like how you've arrived at your take on investing the way you put it.
So, it goes back to something that Mark Cuban said on the call last Saturday night. He used the analogy of, he's tired of people saying that they have a better recipe for a brownie, and the public is just tasting the brownies and they just decide which one they like the best. And that was me in 2017. I was heavy into Litecoin. and I set up a very large Litecoin mining operation without doing any homework on it. I was just excited about it. I really believed in Charlie Lee, and even after he sold all of his coins, it didn't phase me. I was just dead set on Litecoin because I thought that it had the best recipe, you know. But I didn't do any homework. I wasn't into economics. I wasn't into to anything financial related. I was just excited, and I was just like leading my own charge and going full force into, you know, stacking Litecoin and mining Litecoin. And obviously we know what happened there. I went down in flames, and it was probably the best thing that happened to me, because when that happens to you, now you take a step back and start doing your research and start doing your homework. And you know, I've learned a lot from a lot of people on this call and listening to, you know, Twitter and YouTube, and it's been an incredible experience. So, you know, I'm much more in tune to what's going on with gold and real estate. I even got my real estate license at one point, just for the sole reason of I wanted to learn more about real estate and wanted to understand it better. And I just love some of the things that, you know, Michael Saylor said, like, hey, you buy a house and 50 years later you want to sell that house. I don't care where it's at. It's a 50-year-old house. But if you buy a Bitcoin and 50 years later you want to sell that Bitcoin, it's the very same Bitcoin, except, you know, it's just worth a whole lot more. And so just little things like that, learning things and spending that 40 plus hours, you know, up front has really changed my outlook. And I'm very, very bullish on Bitcoin, along with most of the people on this call.
Wow, thanks for sharing. Like, what a powerful cautionary tale. I'm sure that many listeners here are, you know, are not only familiar, but like, you know, have felt your pain and have been there too in some capacity. I think it's, and thanks for sharing, really. Like, it's so, I think I wonder to what extent the nature of the internet is kind of like facilitating people getting sucked into like a confirmation bias bubble, or like, you know, I've noticed with Twitter, for example, it says like, "Ooh, tell us what content you want to hear from," and then so basically, if you're excited about Litecoin, you could just click Litecoin and then click away all the other stuff, and then all you're going to hear is great, good news about Litecoin all the time. And you know, I guess my gripe has been that I think a lot of people that believe in Ethereum have kind of gotten stuck in a confirmation bias bubble, and are just kind of blind to some fundamental architectural concerns that I think are very valid. So yeah, I think really, because investing the time I think is indeed very important, and I'm really glad to hear that you're able to you know, turn around and that you feel probably a lot safer with your investments now than you did a few years ago.
Well, it went from a, you know, kind of a get rich quick, you know, get a Ferrari strategy now to a wealth building strategy. You know, I mean, it's
Yeah,
complete flip.
yeah. Yeah, and I mean, oh, yeah, I sleep so much better when like, I guess for me, maybe I feel like the initial emotion when you get into investing is either fear or greed. You know, fear, it's like, oh my God, I have money, I need to do something with it. Or greed is kind of like, I don't know, this is exciting, and you know, I could win the lottery, so to speak. And I guess for me, it was more just because of the circumstance was more fear. Um, I think I've been really lucky in certain ways with timing and stuff. Um, but yeah, oh man, like I feel curious if other people want to share as well, like some of their experiences in because we're talking about the next decade, but of course, we're, you know, whatever we do in investing is informed by our experiences. So if anyone else wants to share stories like Kenneth's,
Yeah, well,
feel free
Kenneth,
to
I'll lead with I
share.
had a massive Ethereum operation, and it was I got one of my principles is solicit feedback, and so I felt really cool having a sweet computer HPC Ethereum mine, but just getting, like you said, getting out of my confirmation bias and engaging with the Bitcoin maximalist community, and really one of mine is also just respectfully engage, and like saying something with positive intent. So there were several. I will absolutely credit you. I will never forget our lunch down in Austin. It was like the first time I really engaged the big, true, pure Bitcoin side. And that was, just that idea of soliciting feedback was essential in kind of my journey, from blockchain to crypto, and just, back to, okay, sound money and energy on Bitcoin.
Yeah, like, weirdly, principles always have value if you like start thinking from first principles, or at least you're challenged to do so. I feel like there's always value to then take that and then take it back to the practical level. Yeah, thank you for inviting me to those like really, really great meetings. I think you did and probably still do. You do really great work in that area. Let's see. We have crypto. I love these. Sorry, but I'm multitasking. But I love these alter egos that people have. So, crypto rockstar, feel free to pipe up. Crypto rockstar, you are on. You do have to unmute if you want to say something.
You bet. Hey, this is so educational and so much brain power in here. I'm almost intimidated just to come in here and even ask a simple question. So, but I'll cut to the chase. And I just kind of wanted to throw something at you and at the audience is just your thoughts on the NFT craze. So I'm just becoming super passionate about some of these platforms, and obviously Bitcoin and cryptocurrency has opened up all these tentacles and branches of decentralized places, and everybody has its own thing. I guess my question is your thoughts on NFT investing.
Yeah, like I super appreciate you, like, just getting your voice out there and speaking up, even if it's intimidating. I really sympathize. I used to always be very scared to speak, even just to ask a question or something. And I think your question is great. And actually, literally, I think is literally yesterday. Literally yesterday, my wife asked me, now, what is an NFT? So we had the NFT conversation. We'll probably have more, but we were just kind of talking about what's happening in those markets. I mean, yeah. So and I know you're not asking what it is. You're more asking about, what do I think of the market and what's going on with that. I mean, I think that before talking about the utility of NFTs, I think it's important to consider the platforms on which those things are made, on which people are experimenting, because whatever you embed in a blockchain, uh, I guess there's two reasons why you might want to do that. One is that you want a permanence, you want a permanent record of what you're doing, and two is you want it to be uh, decentralized. You want it to be censorship resistant or universally accessible at all times. Um, and so, whatever an NFT is, before we get into that and whether it's useful, I think, you know, it has to be created on a platform that has one or two of those features. And so if you have like some kind of newfangled blockchain that is all hyping up NFTs and they're like, yeah, and whatever, they're like, you can store entire videos here and make those NFTs. It's like, well, yeah, but Amazon AWS can do that too. Like you can just, put it in the cloud. Like, is this I think because we're talking about art, I and like non-fungible tokens, it's about like storing something of value. Like anything with value has to have, in my opinion, an element of permanence. So I don't know. I just feel like that has to be your area of study before you go into, okay, NFTs in general, and then before you go into like this particular NFT or that particular project. And I really feel like that's under highlighted, that part of the discussion, and that's kind of where you can get caught up, I think, in the confirmation bias thing of like, oh, this idea is great. It was like, yeah, but if the platform goes away tomorrow, so will all your NFTs have gone away. So I don't know. Does that make sense? Those thoughts? And yeah, just I feel curious to hear a bit more about your NFT journeys.
Yeah, so my
A little
experience,
singular.
getting into crypto, currency, Bitcoin, Litecoin, and all of the other altcoins, it seems like now that Coinbase just announced, a couple days ago that they're gonna have over 3 million wallets of potential collectors and creators. It's going to flood the gates, to go out there onto OpenSea. But it seems like, what I'm hearing in the last several months is that there's now an established blue chip of NFTs, such as Lazy Lions, CryptoPunks, and some of the other ones, Bored Apes and things like that. And so for the early adopters in these projects, it seems like that people went in with like 0.05 ETH and, holding it for about 2-3 months. Now they're looking at 30, 50, 75, and so on. So it just seems like it's a timing, the projects and the platform. And so far, it seems like that the growth is just unprecedented. I mean, I know that the Bitcoin is hitting, the all-time high, but what I'm seeing also on the NFT side of things is that all of these projects are hitting as well all-time highs. And in fact, they're not just going in, increments of 100% in gain. They're going like 1,000 and 3,000% of gain. So I guess the idea is obviously diversification, and my thoughts are there's lots of potential, but obviously you have to be cautious. So I'm going to try a few things of my own, and so I'd like to hear maybe someone else in the audience of what your guys' thoughts are on these. So
Yeah, thanks for sharing. I guess, yeah, as you're talking, my thoughts are, if you're gonna do in general, like I think it's good advice in general. If you're gonna be trading and flipping and just playing in a sandbox, try to make sure to separate out your portfolio for that. It's like you're like just mentally or even physically even better, like make sure you have separate wallets to be like, okay, this is my wallet for trading, this is and then on the other hand, this is my long-term hodling portfolio that I'm not going to touch. And so basically and then so with your trading wallet you can go to the casino and then accept that if you lose it all, there's no more trading, like that's it. And try to at least keep your wallet aligned. And if you're new at this, you know put very small amounts of that trading portfolio at risk per trade. Like never put more than 1% of that trading portfolio at risk for any given trade. That's how to survive long term. Otherwise, statistically, you just always get obliterated. Um, and of course, maybe you'll argue like, oh, but these NFTs, they're like long term investments. I'm not going to be trading. Well, a lot of people thought that even back in 2012, like people think that early on in Bitcoin, it was only Bitcoin. Well, that's true, but starting 13 especially, there were lots and lots of altcoins and there were fads. There were like there was a fad of like national altcoins. People thought that weirdly that, countries would have their own coins. And so they had Spain coin and that was going to be used in Spain. And they had Aurora coin, which they tried to distribute among all Icelanders, people in Iceland. It was going to be the coin for Iceland, and they had the Gilder in the Netherlands, and not all of them, but like several of those had spikes of 1,000% and more, even against Bitcoin. People made profits 20x in Bitcoin. And so I just want to like caution a little bit, like you and the audience, that like if you see this happen, it's not necessarily unique what's happening in NFT land. Maybe the numbers are bigger now, but as a percentage of the entire cryptocurrency ecosystem, they may not be bigger than some of that, very small, those very small bubbles in 2012 and 2013. You never heard of those because the entire ecosystem was so much smaller. But if you've been in Bitcoin for a long time, it's like these things come and go, and often they just die a very slow death for a very long time. So I just want to caution, caution about those kind of things.
Wow.
If people want to pipe up about NFTs, feel free to do so. But I'm gonna move on because I want some of the other speaker requests also to honor those.
Thank
If you
you.
have a closing question, feel free to ask.
Oh, no, thank you. Those are some really interesting thoughts and recommendations. So I appreciate you discussing this. Thank you.
Yep, you're welcome, Crypto Rockstar. We have, and I'm prioritizing people who have not spoken yet. So we have Luke Mikic 21. You're still muted. Feel free to unmute, and then you can ask your question. Luke, can you hear us? I'm gonna also approve QUEWB divided by 21 million. Okay, Luke, I'm gonna mute you because, and then we can get you in later because I'm not hearing you. Yeah, QEWB.
Hello.
Feel free to speak. Yep.
Yeah, hello, Q. Yeah, hi, Tua. I just want to say I love your work. I've been listening to you for quite a while. I've got a question, a philosophical question, really. But before I get to that, I'll probably share my mining experience. You can probably tell by my accent, I'm from Australia. I got into mining a few years ago now, but I tried to import into Australia and discovered that the import duties were prohibitive, quite prohibitive. Because there's places you can mine here cheaply, but the capital outlay is expensive. So I ended up moving my equipment to Texas, of all places. So that's just sort of an anecdotal thing I thought I'd mention. But my question, sorry?
Yeah, thanks for sharing. That's so. I mean, I've run into also some Chinese miners here. What Gideon was talking about, and to hear that like you've been exporting machine, it's like truly the metaphor seems to hold about like going to the place with the lowest electricity cost, and it seems like, and correct me if I'm wrong, but it seems like that equation is not just, oh, here's the quote from the quote unquote electricity company, but it's like the cost also includes political factors like import and export duties and regulation and maybe even political stability and those kind of things.
Yeah.
But yeah, thanks for sharing.
I wasn't aware of the I knew there was duties, but I wasn't aware that the extent to which what they call a data processor was, like I think it's like 25% tax almost. So it's just ridiculous.
Wow.
Anyway, so I did import into Australia, but the costs, trying to mine from your own home is not ideal if you don't have solar or some alternative. But anyway, so I moved to Texas. But my philosophical question is more around, look, I've been in this space for a while, and there's probably a few others that have as well. And I think what brings people to this space initially is what I think Jeff Ross called the beginner's mind, where you kind of know something's not right, you feel it, but you're always kind of trying to understand. So, I think a lot of the people that got into Bitcoin early generally were not in it for the money or the kind of the insane gains. They're more in it from initially I'd say, they want to change the world kind of thing. But my question is, as we move forward and the price, obviously goes up, increasingly those sort of people and the way they think are going to have influence. And you can sort of see it happening now, but not greatly. But I just wonder what your thoughts are on what happens when, you get some really, really influential people in politics that can change things. I guess that's my question.
Yeah, interesting. Like, yeah, I mean, I guess that question can go in many directions. But yeah, I mean, like Bitcoin, I guess I'm gonna just say Bitcoin, but like Bitcoin having political weight and Bitcoin having a dedicated lobby, and also, you know, in democracies, for there to be constituents that are just like one issue voters, people who just vote like, I'm gonna vote for the guy. It doesn't matter what, you know, what horse he rides or which sides of parliament he's in. I'm gonna vote for the guy who is just gonna be Bitcoin friendly because I'm a Bitcoiner and I don't want to be taxed and harassed. And it makes sense, right? I mean, in the U.S. alone, I think it's like, what is it now? 40 million people own some Bitcoin. Probably most of them a small amount, but over time, that can really become more influential. I mean, so I think we probably all agree, like this is going to happen. There is going to be an impact on politics, and business, of course, as well, and education, and so many areas. And then the question is how you know, what kind of impact? I think to some extent it's unknown because it's still to be, which means that we literally, this conversation, all these, you know, Twitter hangouts, conferences, you know, this is the phase where a lot of the people that will have the power in 5 or 10 years, their ideas are getting shaped right now. So I'm always trying to be aware of the importance of these kind of conversations, because it really could be like, this could be the moment where some, you know, there's some Bitcoin whale hanging out here and we talk about something, and it strikes him like, oh my God, yeah, this is where I want to put to work my my weight, you know, my generational wealth, my Bitcoins. Um, this is where I'm going. This is going to be the issue that I care about, and then, you know, in 30 years, 40 years of the next generation, that is all going to be played out. So I think that, you know, as little, however little I feel like I know what's going to happen, I do feel like it's very important to have this conversation. And part of what I consider to be like my job and passion is to research how people were handling this new power in a hard money society. How did people in the past, how did they deal with power that was given to them, especially if they belong to a new group or a group that was previously marginalized that all of a sudden do get a lot of means? You know, how did they act to change society for good and for worse? Because I think that, you know, as much as I've talked about the Reformation from 500 years ago, the you know, the Protestant Reformation in positive terms, I think there were some horrendous things that happened. One of which I think is public schooling. I think that came out of misconstrued ideologies that were coming from mostly Protestant, you know, ideas. And so I think there's a danger that Bitcoin ideology could have nefarious effects in some ways where, you know, I don't think it's a given that Bitcoiners are going to do amazingly positive things with the wealth that is given to them. I think we just always have to be, you know, vigilant and thoughtful, and just not rush. You know, that's, we have the privilege of time, at least, you know. We can just plan for the long term, lower our time preference, and just take a long time to think about what we want to do. How do we want to make a difference? Our Bitcoin, you know, knock on wood, but our Bitcoin aren't going anywhere while we think about those things. So yeah, those are some thoughts. Q,
No, Q.
how do I pronounce
Oh, sorry.
how do I
Yeah.
pronounce
No, thanks for
your
that tour. Yeah.
No, Q. I think and I'm also a Bitcoin miner in Texas, so I appreciate you putting your resources here. We'd love to get you here in person if possible. I think that's a really important question, and Tur, kind of something you and I've talked about many years ago. Was we all know our coins are going up, Bitcoin's going to the moon, but I think everyone, and Q, I love how you said it, everyone who that largely most of the people I know that got into Bitcoin are very curious people and truly want to organize society in the most mutually beneficial way in the long term. So I think every single one of us who has Bitcoin, and you know, of course, that's going to appreciate, has a moral responsibility to be intentional, not only with our treasure, but our time and how we. I mean, even Tur, you organizing this, Q, you bringing up this question. I mean, all of us have issues that are important to us, and I think we're all, instead of looking to the politicians and the leaders at the top, you know, I think Bitcoin is the first time in history where all the bottom up people in a decentralized fashion are equipped to be leaders throughout society in a more decentralized fashion. And I think, historically, when disenfranchised groups gain power, it normally doesn't go well. And so I think, just keeping in mind the old quote by Lord Acton of, power corrupts, absolute power corrupts absolutely. So I think just like really approaching things from a principle perspective and, speaking about what principles do we want, what do we want, and then really just focusing on what unites us and, all the different tribes and issues and, finding others that can share in a vision and, using our complementary skill sets and resources to accelerate that vision.
Here. We have Blake War. By the way, guys, I'm really enjoying this. This is pretty much the first spaces I've ever hosted. So I hope and feel free to, in the tweet that I put out, feel free to put in the comments if you want me to do anything different. Because, like I said, I've never done this, but I'm having fun so far. Blake Warlow, I'm adding you as a speaker now. Feel free to share a question. Blake Warlow or Warlomont, Homo sapien. I don't know if you are there. Yeah, you gotta unmute yourself. Looks like you might have some trouble. I'm also connecting Grateful Dad. That's funny how it's like a play of word on Grateful Dead. It's like you're putting a dad joke in your in your name. Grateful Dad, feel free to speak up.
Thanks, sir. I appreciate it. I'm just a dad that's grateful, so that's what it is. But I like your explanation better.
Awesome.
Yeah, I wanted to. I totally miss spaces that was happening last night. I was wondering if you can give your summary on what Jack Dorsey meant with inflation's here to stay, and I guess for Bitcoin to be a solution. But like, what are we expecting to happen? Are we gonna expect like chaos in the coming months with America experiencing hyperinflation, or is it more just this is it? This is the asset for all of us to save it.
Yeah, I mean, I don't know. I'm not sure what you meant with the spaces that happened yesterday. Like maybe Jack did say more about what he meant. I'm sure people will. I haven't really seen tweets about it, so I don't think he's added much more other than yes, hyperinflation, yes, US dollar is what I'm talking about. For me, like I wrote a report I had a financial newsletter back in 2011 to 2013, and I did it, put it out for like Belgian and Dutch investors, and I put out a report, the end of the euro, called the end of the euro, and had like a big euro coin on it with like, it was like going up in flames, and so it was about the euro hyperinflation, um, and I've not that I thought back then that it was going to happen the next year, the next 2 years, but I really did think that maybe by 2020, which felt so far away, we definitely had some like crazy inflation. And we have some now, but it's not as crazy as I thought. Anyway, what I'm just trying to say is that I've had to eat some like humble pie about like, predictability of how fast things unfold and how I feel like you can predict what's going to happen or when something's going to happen, but you can almost never put the two together in one prediction. Um, and especially because what we're talking about is a decay. We're talking about a process of decay. The financial system is decaying, and so we're trying to predict like this tree is rotten from the inside. It's held together with some bark, and it's going to fall down. I predict it's definitely going to fall down, but I don't know when the gust of wind is going to come. Like COVID could not have been predicted probably, and whatever the next shoe to drop is, we can't predict that either. But of course, at the same time, we do see this kind of acceleration in like all this news about the shortages. I pay close attention to because I think it's extremely closely related to inflation. I think, you know, money is the blood of the economy, and inflation is anemia, and probably high inflation is kind of like leukemia, where it's it's just, once the blood starts getting diseased, it becomes extremely hard for the body, which, the metaphor is the marketplace as the entire economy. It becomes extremely hard for the body to get the nutrients where they need to go. And so everything starts clogging up and getting very difficult. And so you get very sick once your blood is affected. And so it's pretty much that happens in society when the money breaks down. It's like this fundamental communications mechanism that starts to cause problems. So just those things are important to me. Looking at volatility as well, looking at speculative behavior, and all of that seems to be accelerating. And of course, Bitcoin is a canary in the coal mine. The more people are buying Bitcoin, it's signaling that they don't trust the alternative. Um, and then in terms of what that looks like, we had some discussion. I don't know if you were here already, but with people from who grew up in Argentina and Brazil and who have family there. And I think that's the kind of experience that I think we can reasonably transpone onto Europe and onto the United States, Western countries as a whole. It's been a very long time since that stuff happened in our neck of the woods. I think the last thing is probably like the severe devaluations during and after the Second World War, like around the 1940s. I think that's probably the closest to the kind of extreme monetary volatility that I'm seeing, going forward. Yeah. Anyway, I don't have much more than that right now. Does that? I mean, no. I feel like I can keep talking, but like, does that begin to answer what you're wondering
Yeah.
about?
I want to ask additional questions, but I know you have a lot of people here, so I'm going to respect their time and just appreciate you for answering that question. Thank you.
Well, you can. How about you do one more? Because we only have like 3 other people requesting to talk right now.
Okay. So.
Oh, we just being
No,
polite.
I actually have a lot. Now I'm trying to choose one. So I'm doing my best to educate, so my circle of friends and families, and have them try to save in Bitcoin and whatnot. I think we all do, having our fair share and struggles, because they'll naturally start bundling Bitcoin to crypto, and they chase for something that maybe provides a yield, or staking, whatnot. Is there anything other than just buying and hold that you think benefits people in different levels? If you're, I think, first timers, I think you want to do dollar cost average and try to get to a whole Bitcoin if you can. And after that, is there anything that people could be doing that's a smart play in terms of appreciating or accumulating more Bitcoin that you see?
Can you tell me a little bit more about like when you think, because you're thinking about in terms of talking to people, is that right? I'm curious about which people, roughly speaking, like what kind of audience are you thinking about?
Diverse, from family members to friends of families, that I'm trying to get on their path for financial independence and providing for their family, especially for expecting something that, what Argentina and Brazil went through. I want to make sure they're better prepared.
And are you mostly talking about peers, like people that are, I don't know, maybe like millennials or something?
Yeah, I'm trying to kind of bunch 2 or 3 questions into one, but yeah, different age group on what they could be doing better. And also, if they're already buying Bitcoin or holding Bitcoin, is there anything they can do to increase that holding?
Yeah, I would say, I mean, this is hard because it's basically not the answer that people want to hear usually. It's like, instead of like, oh, here's another fancy thing where you can earn interest on your Bitcoin, or like, this is definitely going to outperform Bitcoin or whatever. This is it's like the most boring advice that I have is just like, try to not lose them. Like, get the Bitcoin that you can, and then guard it like a hawk, and maybe consider, if you're thinking about diversifying, think about diversifying methods of storing Bitcoin, rather than diversifying into different assets or different, because if you're, one of the things to like earn a yield on Bitcoin, I think it's attractive, but of course it's attractive, but personally, I'm not yet comfortable with the maturity of these companies that offer these kind of products. I don't feel like, me putting Bitcoin at risk at 100% loss, because that's ultimately the price. There's no, if they lose their Bitcoin trading to try and generate yield, my loss is going to be 100% if they go bankrupt doing that. And then what do I get in return? Maybe like a 1% a year. I think BlockFi is now down to 0.25% yield per year. So anyway, like, it's just one of the things that if you're in Bitcoin for a while, you just start developing these scars. And you're kind of like this weathered veteran who's just like seen so many exchanges go belly up, so many exit scams, so many scammy ICO projects. And I'm not saying to be apathetic to all of it. Like, there's some interesting things happening here and there, but I think by far, okay, here's maybe something. Like, if you are thinking about, having other investments in the space, maybe some mining, some Bitcoin mining. Like, it kind of depends on what phase of the cycle we're in. I think that very recently it was very attractive to go into mining. It might still be if you find like a good, solid company, and who has a good contract, maybe some mining, because I think we're finally at a phase where miners can offer products that make sense, and that don't have, too extreme of a risk profile anymore, because the miners themselves are quite mature and weathered, and they've survived a lot of volatility over the years, and so their operations are fairly diversified themselves, not in terms of mining different assets, but like they mine in different locations, and so they're more robust than they used to be. There was actually a cloud mining phase in Bitcoin in 2014 where, miners were selling hash contracts and people were piling in, but it was just way too early. And most of those miners went belly up, and it was a disaster. It would have been, you would have been way better off just buying some Bitcoin than piling into mining. But, anyway, so that's one idea. And then the other idea is that if you're really excited about startup investing, I would say, look at companies that are building on top of Bitcoin, in terms of financialization, in terms of Lightning Network and those kind of things. But that's pretty advanced, right? Most people are not considering themselves angel investors and things like that. But yeah, so it's, basically pretty boring. Just try to not lose your Bitcoin. It's basically, tell them it's the equivalent of buying real estate on Manhattan, on the tip of Manhattan in the early 1900s. Like, this is what it is. It's monumental. It's incredible that we have the privilege of being able to buy so many Satoshis for such a low dollar price. So if you do acquire some, try to hold on to them.
Yeah, and Tur, kick me off if you want me to stop speaking. But grateful, you bring up a great point, and I think also just kind of you might be asking about the principles and just how to better communicate to people, that you care about. Because like, look, we all think Bitcoin's going to the moon, and if you care about someone, you want them to participate in that upside. And I think one thing my wife and I did early on was spend a lot of resources trying to educate our rich white friends about, oh, the Ron Paul audit the Fed, like, inflation, it's coming, like you got to get Bitcoin. And people from the typical financial world and family offices just weren't as receptive to that. They just, well, this is, doesn't make sense. And, I went over to Norway to the Human Rights Foundation over there, and we met dissidents, from Nigeria, women from Venezuela and Afghanistan. And, when you speak to them about Bitcoin, it's like, oh my gosh, this is something I need. Tell me more about it. So I at least have like, look, my friends and family ask me about it, and I kind of try not to talk about it as much, and really spend my resources trying to, inform people that, clearly need Bitcoin, and it really improves their human prosperity and their life more advantageously. And I'll echo what Tur said. I'm a Bitcoin miner. I think it's a great time. Bitcoin mining is that's a great segment, and it's a great, dollar cost average strategy if specifically looking for investment, long-term strategies.
Yeah, and like one of the this sounds maybe more risky to people, but and it's kind of it's maybe out there as far as strategy goes, but you could make potentially a case that, what if you borrow dollars against your Bitcoin stash and then you invest part or all of that into a mining contract that pays out basically dividends, like it pays out whatever it mines, and then you can use that to pay the interest on the loan. Because that often people are the reason why they want cash generating investments is because they have debt to service, and if you have fiat debt, especially the challenge with borrowing against Bitcoin right now is that the terms of the loans are pretty short, and so it's hard to tell whether interest rates are going to go up or down. So anyway, it's a pretty risky strategy what I'm talking about, but
Well,
maybe if your
and I
interest rate
I
is
echo.
low enough, it's defensible.
Yeah, and going with your three buckets, Bitcoin, gold, real estate. I mean, short gold or sell it, and then we use real estate as an income because, like you, I am not at all comfortable using Bitcoin yet to get a yield. So it's in cold, multi-sig storage and all that. But real estate, like, look, inflation's happening. It's been a great hedge against inflation, and so every real estate asset that I invest in or look at has a yield component, and that yield component absolutely gets levered to the hills to go more in on Bitcoin and Bitcoin mining, opportunities.
Yeah, yeah. Thanks for your thoughts. No, I'm keeping you on as a speaker, Gideon. I appreciate your yeah. I don't mind you chipping in. Just for like general housekeeping, my battery is getting a little bit low, and I'm also getting a bit tired. So let's. I'm not gonna wrap up yet, but just so you know, I'm gonna wrap up in probably within the half hour or something. But this is great fun. We have La vida con Bitcoin es mejor. Bitcoin life. That's a cool handle. Bitcoiner life. You are on.
Hi there. Yeah, I just need to plug in my mobile because it's low on battery. Okay, so my wife is Spanish. I've been into Bitcoin for a few years. I've been DCAing, especially the last year. And my wife's just come into a load of money. And, well, she's inherited some. And she wants to invest in real estate. And I'm trying to persuade her or explain to her why it's a better investment, Bitcoin. So obviously for her, I mean, I've got all my resources in English, but for her it's her second language, English, and we speak in Spanish to each other. She understands, but it's kind of it's hard work for her to go through some of this material in English. I wondered if anyone listening knows if there's a resource page in Spanish with where Spanish speakers can go and find out about why Bitcoin is the best investment right now.
Yeah, I feel curious to hear as well. I feel pretty strongly there must be. There's been some great, like for example. Wait, would you take me off speaker or lower your volume?
Oh, sure. Sorry.
Oh, that's okay. Oh, let me mute you just for a sec. Okay. So, yeah, just people have been doing great work translating. There's been some books also translated to Spanish, and even like the report that I wrote about the Bitcoin Reformation has had a great translation in Spanish. It's probably not great like beginner material, but yeah, feel free, guys. Maybe also, I would say if anyone knows, go to my last tweet and put it in as a comment, and then La Vida, you can just scroll and see if anybody responded. That's what I would suggest, because unless someone raises their hand, then I can see it.
Okay.
Yeah.
Okay, that's good. I mean, I've been I'm printing out. I know that Vijay Boyapati's the big article he wrote is in Spanish, and I'm actually editing so I can print it for her. And also, I know
that's a good one.
There's a part of 21 Lessons, Gigi's article, but only the first part has been translated in Spanish. So I've been going through those type of Medium articles looking for something.
Yeah, and I would say in general, like, you know your wife best. I would say, like, if there is any, I mean, for it's a bit hard for me because my wife was a Bitcoiner before we ever met, so I
Wow.
can't really relate to, like, how I orange pilled my wife, because we were on the same page from the beginning. But yeah, I guess in general, I feel like if I can if I can connect with something they really care about, that is often a powerful way to, like, help them think. It's like, oh, this thing that you care about, well, Bitcoin has some great things to say about that, or, like, you know, so anyway, like that just to try and think from your wife's perspective, like, what are some things that she cares about that
Sure.
this store you have a story to, like, tag on to. But yeah, best of luck to
Yeah.
that journey. I had somebody here who might have, yeah, Koti. He's a speaker. So if you have thoughts about what we're saying, feel free to share.
Yeah. Hello, Tour. Hi, la vida con Bitcoin es mejor. Let me tell you that. Hi, bro. Basically, I'm one of the guys in the Spanish-speaking world that we're like doing the translation labor of all the Bitcoin magazine articles and so on. Like soon there will be like we'll release a lot of them, like a very like with a lot of insights and so on as well. I don't know if you have seen the JW Weatherman resource called 10 Hours of Bitcoin. I'm also doing the Spanish version of that one.
No, I don't know that one.
Yeah, so it will have all the Nick Szabo article about the starting out origins of money and all of that for your wife. Yeah, for your wife and so on.
Is there a website that you can share?
I mean, the website's already out there. The thing is, I'm releasing an article every time I finish an article. I'm putting out there. So yeah, you can follow me if you want, and I will give you the website. I mean, it's already on, but like those are very long articles, to be honest. So
okay.
Awesome.
Yeah, but
well, I suggest you guys connect. I'm gonna jump to another
That's
question because
cool.
I want to stay a little bit on topic.
Yeah,
Thanks
thanks,
for
Tor.
chipping
Thanks,
in.
Tor. It's been good listening to all this discussion, and yeah, thanks a lot for holding this spaces. See you.
You're very welcome. You're very welcome. Thank you.
Heading out. Thank you.
Bye, Cody. Thanks.
Sure.
So we have Murat Akyol. Feel free to correct me if I mispronounce your names. Murat, feel free to speak up. Oh, you're a digital artist. I'm also approving Bender because it seems like Murat may have a problem unmuting. Bender, do you have a question? Crypto Benders, you're on. Actually, I'm gonna also approve all seasons because I feel like you've been requesting access forever. All seasons, do you have a question? All seasons. King's good servant.
Hi, Tor. Thanks for letting me speak. Real quick about the Spanish resources. There is Safedean's book, the Bitcoin Standard, that's been translated into Spanish. El Patron Bitcoin.
Very, very cool. I love that title, by the way. It's like the boss.
Yeah. But to my question, first question was, you mentioned how we have these occasional moments of altcoins going 20x, against Bitcoin. And of course, for years there's been this talk of flippening, and I believe it actually happened for maybe a couple of hours back in 2017 that Ethereum had the largest market cap, but very short lived. Do you think that the Bitcoin market cap will just permanently be a ceiling? Will it forever hold that number one spot? And as projects get closer to it, it'll just attract more defense of that spot. That hasn't become a taboo.
Yeah, thanks. That's a great question. It also plays a little bit into like the, Bitcoin dominance question. Like if you go
Yeah,
to, I think it's coin market cap slash, what is it again? I think it's like, I forget, but coin market cap has a page where it's like, Bitcoin as market cap compared to the other market caps, and you can like see it fluctuate. Um, Yeah, I mean, I've always, not that, that makes it more true, but like since the beginning, I've been of the thought that Bitcoin is going to be dominant and there's going to be a very long, long tail. And this is in the long run, of course. In the long run, there'll be a long tail with like smaller and smaller alternatives, but that Bitcoin's value will be about, between 70 and 90% of the whole market, if not more, in the long run. And so I think what's happening now is that there is still a lot of unawareness about the importance of solid architecture and of the value and importance of and the difficulty of achieving true decentralization, censorship resistance, scarcity, auditability. I think all those features, like Vishay describes in the bullish case of Bitcoin, I think all those features are key, absolutely crucial to have in your core protocol. Otherwise, you can just as well use Amazon AWS. You can just spin up a random database and that's it. Um, and I think that because now the stakes are not that high yet. We're talking about $1 or $2 trillion, but like once we're talking about $10 trillion, 20, or whatever, like more and more percentages of the global financial system, and the stakes are much higher, then you get much more adversarial activity to try and boycott, shut down, influence, lobby, you name it. And I think a platform like Ethereum is extremely vulnerable to that kind of stuff. I mean, it's already led by basically a central committee, which the fact that they can just push through whatever hard fork they want is testament to how not decentralized it is. And so I just feel like I just don't see in the long run how that could supersede the value of Bitcoin, which is much more atomic, much more fundamental, and because it's what makes Bitcoin unique. Like it is what makes it a Schelling point, and what makes it indestructible. And whatever is second or whatever is more centralized can be can be replaced by something else. Like Ethereum could be replaced by Solana or whatever. Just like in the domain name spaces, like .com is king, and all the other domain extensions, there can be fads, but fundamentally, they are interchangeable. Maybe that's a stretch to make that metaphor, but there's something there. So yeah, I still think that Ethereum is overvalued, and there is nothing that will take its place as long as Bitcoin can retain its true decentralization, as long as as long as Bitcoin's blockchain can remain lean. If you can keep running it from like a little Android phone, if you can run a full node from that, I think it's gonna remain king. Um, Similar to how, again, these are all imperfect, comparisons, but remember the search engine wars in the late 90s and the early 2000s, where initially it seemed like there's going to be 20, 30, 100 different search engines that we all are going to use We're going to use Ask Jeeves if it's about, and people have already forgotten what that one is, but that was like a butler, and you could ask it like
Yeah.
specific questions, and then you had other search engines that specialize in other things. And so people had this idea that like, oh yeah, it makes sense. Each search engine is going to have its own specialization. Similar now, like people think each blockchain is going to have its own use. Whereas like, no, 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 no. The blockchain is only the core level, the foundation, providing the secure anchor, and it's the wholesale market. It's like the shipping containers. It's not the retail at all. This is like nobody's going to talk about blockchains in 20 years from now, 30 years from now, and at least not normal people. Like it just will be part of the infrastructure of the world that nobody really has to talk about because it's just there. Only if you're
Yeah,
a
and
professional are you going to have those debates. So anyway, that's like a long answer as to like why I think Bitcoin's dominance and also like any kind of need that we have for functionality can be built and will be built on higher layers of Bitcoin. Like that's the modular design of Bitcoin is so key in understanding this whole ecosystem. Like if you just look at blockchains, you're completely missing the picture. A blockchain is just a foundation. We need the walls, we need the interior, we need the roof, we need all the layers on top that are going to make the Bitcoin ecosystem what it is. Like that's why we're talking about the internet for money, um, or the internet of money, whatever you want to call it. It's an entire universe that's going to be built on top of that bedrock. Like Bitcoin is just like an island, and we're going to build the layers of cities and other types of infrastructures on top of it. Um, but and so you're just putting the cart in front of the horse if you're getting all excited about NFTs and all that fancy stuff, because you can totally do it on Bitcoin. It's just to do it right, it needs a bit more time because somehow my phone is not charging. Okay. But just yeah, just some thoughts as to why I think Bitcoin's dominance is
yeah,
gonna stay
and
intact.
I'll echo. There's no perfect analogy, but whoever thought of the land analogy is great. And the largest asset class in the world is land, and Bitcoin is the current native currency of the digital world, but it's also going to be the land and the basis for which we build everything on top of. And so if that's layer one, the Bitcoin blockchain, of course it has to be the biggest because it's the foundation upon which the decentralized digital future will be built.
Yeah, and I think that your search engine analogy is great. I remember when Yahoo was more a directory than it was a search engine. Like in the very beginning, and people just couldn't think that the internet would get that huge. They could no longer have a complete directory of all the websites about a certain project in a list.
Exactly. And, and
Uh,
and Yahoo was built on that idea. It's like, we're gonna have humans crawling the web and they're gonna build, directory for people who are like younger. Like a directory, it basically meant like a portal where you had, a bunch of words and then you could click through and then so there's like a kind of a tree of categories and you would just keep clicking through until you found the category you wanted, kind of like a Craigslist of the internet. And so Yahoo thought like, oh, that's how we're going to index the internet. And then the guys at Google were like, that's completely ridiculous. The internet is going to scale so much that you will never be able to hire enough humans to browse it all. So we need to create bots and smart algorithms. And of course they won, and Yahoo was blown out of the water. And so, yeah, I feel like there's an analogy in terms of culture. I feel like the Yahoo culture is more prevalent in the Ethereum ecosystem, and the Google culture is more prevalent in the Bitcoin ecosystem.
just one more question, Tur,
Sure.
about the convention that seems to be growing in recent years of thinking in terms of satoshis. Do you think that that's a growing convention, and what effect do you think that will have on the market as a whole?
Yeah, I like it. I mean, like, it's been the longest time. Like, people were like, in 2015, like, when are we finally going to start talking about bits? We need to, 1,000th of a Bitcoin is a bit, and that'll be, we need to, because it is true, like, unit bias is a real thing. Like, people feel like I remember thinking about, oh, like Berkshire Hathaway, like I'm supposed to buy a fraction of because the value of, I think, of Berkshire Hathaway share, I don't know now, but it was like $200,000 for one share, and so you just kind of feel like you're a loser if you own like a little fraction of a share, and I think a lot of people feel that way about Bitcoin. It's like, oh, like I can only own 0.002 Bitcoin, like that's stupid. I'd rather have like 100,000 Dogecoin, even if it just feels better. And so I think that it's a thing. It's going to happen. People don't like to own fractions of things. They like to own a lot of things, a lot of the same thing. And so maybe it'll be Sats. I think so. I think Sats is going to be popular for as long as we live. I think people are going to talk about Satoshis. But maybe there'll be something in the middle at some point. Just how we talk about thousands and millions and whatever, like there'll be words, and I think there's some cool innovations about that now, or at least some cool ideas that are circulating. So I think it's just a matter of time.
Great, thanks.
Yep, you're welcome. Thanks for having for coming on. All right, so we have wait, Blake Warlow. Oh yeah, I tried to have you on before, so let me try again. Blake, can you hear us or try to speak?
Okay. Can you hear me now?
Oh yeah, there you are. Yep.
Sweet. Second time's a charm. First and foremost, thank you, Tour, for your time today. I too think these Twitter Spaces and just conversations in general are meaningful and can inspire impactful change. I thought the land analogy was great. I have a quote, and then I'll ask my question. But I thought of this quote when we were talking about land and its pertinence to Bitcoin. And the quote is from Mark Twain, and it's, buy land, they're not making any more of it. And we can technically say the same for Bitcoin, which is there's only going to be 21 million. And therefore, we're not making any more after that. And so I thought the relevance to that quote was kind of just meaningful, and I wanted to share. But my question was actually more related to what the listener Q had asked earlier, which prompted a great response on your end, Tour, which kind of would just make me think about what is our, or rather from Satoshi's perspective even, what would be his call to action at this day and age. If someone were looking to get started in a career in DeFi and crypto and Bitcoin more specifically, or just kind of wanted to further push the narrative, where are some places you think just the Bitcoin community can tackle and start to really make a change and put more energy and focus into it? Thanks.
So thanks. It was a great quote, by the way. Yeah, they're not making any more of it, and you could even argue that, like, very slowly, Bitcoin Island is going to shrink over time. It already has, because of Satoshi said it at some point as well, that basically any Bitcoin that people lose is a donation to all the other Bitcoin holders, because the value, it becomes more scarce, and probably 2, 3, maybe 4 million Bitcoin have already irreparably disappeared, which is fine because we can just use the other one. It just Bitcoin stays as useful as it is. But about your question, I wanted to ask if you could clarify a little bit. Like, do you mean, what are some of the ways that people can make a career, or like acquire knowledge that is useful to Bitcoin, or do you mean
Sure.
what directions can we take Bitcoin in?
A little bit of both, I guess. Talking a little bit more personally, like I have a little bit of time and some capital that I want to, allocate towards the industry as a whole. Aside from obviously just buying into Bitcoin directly and owning Bitcoin. And I do have a small scale mining operation going as it stands. So you kind of have already answered my question in a way earlier, talking
Mm,
about where, you know, the best kind of investment could be into this space right now. So yeah, I guess kind of like where are, I don't want to say flaws in the Bitcoin network and industry as a whole, but yeah, like I know lobbying has kind of ramped up lately. You know,
mm,
there's I don't want to kind of go into a market that's already overly saturated. You know, there's already so many podcasts. There's, and no knock on people trying to start those things. You know, I just think, okay, what's maybe an area of this industry that needs help? And yeah, I'm
right.
just trying to keep my eyes peeled for opportunity.
Oh, interesting. I don't know why, but what came to mind was to me was Jim Collins's book called Good to Great. And he has a predecessor to that book that I actually never read, but I just loved Good to Great in my 20s. I read it, and it just really helped me helped kind of crystallize my thinking about, you know, my own abilities, and then how do I engage with the world in ways that are win-win, and how do I kind of, you know, push forward the things that I'm passionate about in a way that, so he just has some observations that I think um are were helpful, at least to me. And I, because it's hard. It's like it's kind of like a Venn diagram. It's like, you know, what are you passionate about? And then it's like, okay, where can you make the most difference? Which is maybe about, you know, what are some low-hanging fruit, or what are some underserved niches of, I don't mean the, you know, the mustachy one. I mean the niches, um, in the Bitcoin space. And then also, you know, what are you feeling passionate about? You know, it's kind of like a cross between those Venn diagrams. And so I think I can only speak about, you know, the Bitcoin space and potential low-hanging fruit. Um,
I
I mean, I think Bitcoin, one thing that I've seen that I think still people, this is early days, that is the Bitcoin only stuff. You know, like Swan Bitcoin is now like a Bitcoin only company. Blockstream has for a long time been a Bitcoin only company. But there is something really elegant about, you know, how pure that is. And I think even though people might think now like, oh yeah, everybody's doing it, I think it's so early still to do something that is as Bitcoin only. And then I would say, if you're still not sure, which makes sense, like, you know, for just browsing online, I would say go to conferences, like try to meet people in person. And that's something Jim Collins also talks about, is like, you know, first figure out who to put on the bus. You know, first put the people on the bus, and then together figure out where you want to drive. And so if you're kind of coming from another world, maybe you had a career in a different area, and you kind of encounter Bitcoin, it's like find some Bitcoiners first, or people in this space that you feel a connection with, and then maybe you just get excited about what they're working on, or like, you know, you kind of, or you know, you decide the direction of the bus, or, you know, whatever. But like, there's something to the community aspect, and knowing people in person, that I think makes these questions less theoretical and more kind of like, you can more go from a gut place. I don't know if that makes sense, but those are some thoughts.
Yeah, and even just, you know, like socializing ideas like we're doing on here. I think there's a lot of areas. You know, I heard, you know, people always say, "Oh, I want to get into Bitcoin," but I think another really powerful thought someone tweeted out was like, "Don't get into Bitcoin, bring Bitcoin to your industry." And I think, you know,
Mm,
that's really important, because Bitcoin's going to permeate all corners of society in the coming century. And really, I mean, but specifically one area I've seen is just the core devs. I mean, the Bitcoin mining network was not decentralized. The China situation a few years ago was real, and I think we as an industry were naive to how much hash power was in China. But now that's obviously not a problem. China gave Texas the greatest gift ever, that it's, you know, just geopolitically shifting. So I'm glad to hear you're mining, but you're really just supporting core devs and just the development side. I think there's a lot of really talented software developers who are, you know, want to just work on Bitcoin, but that's maybe not an economic feasibility. So I think anyone who can self-actualize into, hey, I'm interested in the space, and has any capabilities. I mean, what chain code and people like Adam Jonas are doing, I think are really powerful to not only distribute Bitcoin mining hash power, but also just knowledge bases globally. So I think just supporting Chaincode or copying their model, they're very open. They have a lot of literature out there to accelerate best practices.
Thank you. Well put on both ends there. That'll help me to formulate my thoughts. Thanks again.
All right. Have a good one. Bye, Blake. So it's going to be at the last few questions here because I'm going to wrap up soon. So let's say we're going to do Adrian, Kyle, and Anarchy with a Q. So please hang in there. I'm going to get to each of your questions, and then I will elegantly or not bow out. So we have Kyle first. Kyle.
Hey, Tor, can you hear me?
Yep.
Yeah, thanks for having me on. At first, hey, I really appreciate your quality of thought. And I really appreciate you putting it out there in public with your real name. So, yeah, thanks a lot for what you're doing. Appreciate it. My question is, back at the beginning of this conversation, someone was asking about the block subsidy as it goes to zero, that affecting the mining support that protects the network. And I want to motivate this question by pointing out that Lynn Alden says that this is one of the more realistic concerns with the Bitcoin network. And then you ask Preston Pish, hey, what are you looking for if you're looking at the health of the network or as a concern? And he points out the hash rate. Go look at the hash rate. So I think that's important. And from like a 10-year time horizon investing point of view, I think if you can identify FUD and eliminate it early, you already know the answer to that FUD. You can buy the dip on that. So that's helpful. And one thing, so I'm hoping to just hear your feedback on this, how this might play out in my mind. So if it is the case that the fees cannot support the hash rate that is enough to protect the network, what you might see is it being subject to attack. That's completely possible. We don't know what that number is. And one possible solution at that time might be to just revert back to a small block subsidy, hard fork. And I know that would sound extremely unpopular now. Everyone has the $21 million cap, but the market can choose. You just choose not to do that hard fork. But do you see that as being a possible solution to keep the miners and keep the network, keep the hash rate high, if that were the case that it was ever not high enough?
Wait, I apologize because my AirPods, their battery died, and so I missed a little bit. But could you rehash, pun intended, the part with about the hard fork, the last part?
Yeah, I was just asking if your thoughts on a possible solution to the hash rate we learn not being high enough due to the incentive being not that high, due to the transaction fee demand not being high enough. If that were the case, the hash rate's not that high, a possible solution might be to introduce a hard fork that has some sustaining non-zero block subsidy for the miners so there will be a continued inflation rate. And like I said, I think that might be really unpopular now, but if it is at the case where the network is truly unsecure because it's not protected enough, if we're at that point, something as radical as that might be a possible solution that we could just jump to. And it would still be the hardest money in the world. I'm sure that subsidy would be extremely small, smaller than gold for sure. And in my eye, I've heard no one address this as a possible solution.
Yeah.
I think it makes sense.
Yeah.
Hey, Turk,
Yeah,
can I take this real quick, and then I got to hop off. I got a kid going to. Hey, I would not want that to happen, and I do agree. Margins, like any commodity business, they start big, they're going to shrink. That's a fact, and it's just going to happen faster in Bitcoin. But I think drawing on analogies, like I'll try to do, like banks don't make a lot of money lending money; they make money on the fees and services on top of that. And so my vision of the future for Bitcoin miners, there's no pure play Bitcoin miner. All Bitcoin miners will become energy traders and financial product offering. So all Bitcoin miners in the future, I envision rivaling the largest financial and global super majors in the oil. And just like the Exxons and the Chevrons of the world, they have they do trading, they do hedging, they do power contracts. I think all of those are trying to do energy transition. I think Bitcoin miners are the most well positioned to not only mine Bitcoin,
but then, basically morph into larger energy conglomerates and then larger financial institutions with massive balance sheets who maybe make razor thin margins, but have all these other services and products that can layer on. So that's kind of my vision of the future. But again, let the market compete. So again, Tur, I love philosophy. This has been awesome, and appreciate all the good questions, guys. Keep doing good
Okay,
work.
I just want to say, Gideon, you just blew my mind. Thanks. So that was awesome. Wow, thanks. See,
Yep.
I'll talk to you soon. I'll talk a little bit about what you just said, but have a
Okay.
good one, and we'll talk soon.
Okay. Thanks, guys.
Yep. Yeah, I just wanted to say, like, it blew my mind because it's as I heard him say it, is like, oh, that sounds so obvious, and maybe there's a flaw there that I'm not seeing, but it's like, I think this, well, I feel like in the Bitcoin space, it's been an accepted fact for a while that Bitcoin miners are going to kind of drive down the cost, the profit margins so much that they'll become like commodity providers, commoditized. So it's going to become commoditized, which means that, yeah, your profits have to come from somewhere else. And yeah, all of a sudden it makes complete sense the way he's put it. To me, my response, Kyle, was going to be also I really like how, and speaking of quality of thinking, like I think that's high quality thought in terms of, rather than thinking like, what do we want for there to happen, like, oh yeah, it'll be fine, we'll be fine to, those fees and the market is going to figure it out, is like to twist it around and be like, okay, let's do a steel man. Let's say that there's not enough fees, and the miners are getting pissed off, and they're like, what the hell, we're doing all this work and we're not getting paid for it. We're going to band together and do a hard fork. We're advocating, and then there's going to be something like a Bitcoin war again, where some people are against it, other people are totally for it. I guess you could imagine that kind of war where the miners are like, or not all miners, but a significant portion of the miners are going to be like, yeah, we want a hard fork, put in that extra fee, or put in that extra block reward. It could be that some other miners would then retaliate and say, no, we're just going to ask for more fees. We don't support the hard fork. Support Bitcoin with higher fees. And then maybe there's even like a soft fork where you could kind of make it easier to charge higher fees or something like that. But yeah, either way, it wouldn't be the death of Bitcoin. It would just be kind of a creative way for the market to figure out what we want. I think after all those years, it would be very unlikely that a hard fork would win, but it could be that the threat of an attack could be enough to kind of create some changes that make the whole network more long-term sustainable. Does
Yeah,
that make sense?
it does. Thanks for the response. Yeah, I was thinking, importantly in that situation, what do the node operators think they control?
Right.
So
Yeah.
I was thinking, if it were in the extreme that the hash power is so low that there's actually 51% attacks happening, just imagine a hash power that is low enough where it could be attacked. It would be in the interest of the node operators to have a more secure network.
Yep.
That is what Bitcoin is doing and does. So at that time, if that just were the case, oh man, we got to bump up the hash rate. I'm going to vote with my node to have something that's going to help the network be more secure. So in my view, I think that's a possible thing. So thanks for your feedback. I really appreciate it.
Yeah, you're welcome. You're welcome. So now we have the last question from Anarchy with a Q. Wait, I'm adding you as a speaker. Anarchy, yeah, feel free to unmute and go ahead.
Hey, Tur. Thanks a lot for having me up. Just a little anecdote. I got into Bitcoin early this year, 2021, and I'm just super grateful that Preston Pish happened to have you on your on his podcast, and you opened up your account for that day. So thanks a lot for that. My question is, looking forward maybe 1 to 5 years, what do you see as the biggest challenges or concern facing either Bitcoin as an asset or just largely the community? And the second part of the question would be, what are some positive developments that you've seen either this cycle or maybe going on into the next cycle that you want to keep watching or that you're excited about?
Yeah, and it's funny that you mentioned the Preston podcast, because I remember feeling like self-conscious after, like I even like messaged him. I was like,
man, I was like really tired today, and I don't know if I did a good job. And so it's nice to it's nice to hear that at least for some people it was valuable. Um, so your question is, I'm gonna start with the first one. It's like, you mean for the next like 3 to 5 years? Like, what am I worried about? Is that what you said?
Yeah, what are some concerns that you would have, I guess, about just Bitcoin in general, or challenges
Yep.
that we might face going forward?
Yep. Yeah. So the next 3 to 5 years, I would say the highest on the list for me definitely is just government. I mean, it's funny I'm talking to anarchy, but yeah, it's just like, I don't think we've really seen harsh crackdowns other than the China crackdowns, and I think it's because this really goes to the heart of political power. Like, you're basically talking about uh, almost like switching off the main switch of the electricity in the government building. That's how they fund themselves. They need that fiat value and that ability to just seigniorage and print more. And then if you undermine that by promoting Bitcoin and all the value in the bond market is going to Bitcoin and all the value in the cash market is going to Bitcoin, then government's going to feel really threatened. And so I'm waiting for some kind of backlash, and I don't think it'll be extremely coordinated internationally. There's going to be some countries and even states that have totally different incentives. Like if you're a energy producing nation, then you are more likely to be sympathetic towards Bitcoin. If you're strong with technology, you're also more likely to be sympathetic towards Bitcoin. If you've been like suffering under IMF loans for many years, you also have an incentive to be Bitcoin friendly, because this just represents a totally different model. But then on the other hand, if you've been profiting off of dollar reserve status and the euro and things like that, maybe you're going to be way more hostile. So that's my main concern, and also just like I'm just trying to be aware that it might not be an outright attack. It might not be like, hey, we're here to confiscate your Bitcoin, blah, blah, blah. It could be like an appeal to patriotism. It could be like kind of like how they did in the Second World War, where in the US, there was a need for the soldiers to have all the food that they needed, and there was an appeal for people to be patriotic, and it's such a dire situation, and so they started confiscating stockpiles of sugar. For example, if you read the history of Coca-Cola, you see that I'm forgetting which of the two, whether it was Pepsi or Cola, but one of the two had basically, I think it was Pepsi, had centralized stockpiles of their sugar, and Coca-Cola, they would outsource the bottling. So Coca-Cola only made the syrup without the sugar, and then they would send the concentrate to the bottlers, who were basically decentralized. They were just different companies who got a license from Coke to do that. And so they did not have centralized sugar storages. And so for a while, Pepsi really got in trouble. And people can correct me if I said it wrong. Feel free to comment on my Twitter feed. But for a while, like Pepsi really got in trouble because their sugar got confiscated. And so, but there was never like the big sugar crackdown or something. It was just like a thing that the government did. And so, if you store your Bitcoin, for example, in a place that is easy for the government to get to, like, for example, Coinbase or something like that, which has a lot of them, that might be the first place they go look if there is an appeal to be done to patriotism and an urgent need for the nation or whatever. So there's I guess I'm just trying to challenge myself to come up with realistic scenarios other than like, oh, we're just we're becoming North Korea and everything is just forbidden. And I don't think that's very feasible in most countries. If the majority of the people own Bitcoin, like you gotta massage, you gotta be strategic about confiscating or acquiring Bitcoins as a government. So anyway, I'm just, sometimes I spend some idle minutes thinking about that stuff. And then your second question was about what am I excited about? Could you remind me sorry, my dog is scratching. Could you remind me the time period? Were you saying the next year or so? What I'm excited about?
Yeah, I guess just what you're keeping your eye on. Maybe it was some developments. Like obviously, El Salvador caught everyone by surprise this cycle. So maybe that kind of brought your interest into looking into maybe other countries that would be willing to adopt it or are kind of waiting to see El Salvador and how that turns out. But maybe, yeah, maybe some other news that you've heard about that you feel is important.
Well, I guess if I just think about myself, it's mostly my concern now is just risk management, portfolio management, just trying to keep everything buttoned up and reviewing, because it's kind of the wave is coming. I think I could be wrong, but I think we're just getting started with this big rally. Bitcoin is going to go, I think, to 100, maybe $200,000 in this cycle. And so that means more ransomware attacks, more threats all around, aside from all the good news. So that's something I'm thinking about just purely selfishly. And then in terms of positioning, I think that a bunch of Bitcoin companies, are going to go public, and so there's just things that you know it's just something to think about. I think it's it'll be a way to diversify your portfolio, and it's something to consider, and it'll have ramifications. I think it'll grow the Bitcoin market as a whole. Let's see, what else am I following or keeping an eye on? I just think Bitcoin is financializing. I think insurance companies are going to start buying Bitcoin, pension funds. I mean, this is it. It's just it's Bitcoin becoming mainstream. It's incredible. I guess okay. This is what I think about the most is basically, one thing is how to become financially independent, which was my concern for the past 10, 15 years. And now that I feel like I'm there, now it's okay, how do I give meaning to my life and my endeavors? And that means mostly I find myself thinking long term, very long term. It's okay, well, Bitcoin family offices are going to have huge power, or just basically Bitcoin is going to change things. And I want to think about how, with my own resources, what is the most meaningful thing I can do. And so that's the kind of stuff that I'll be writing about, and trying to learn from history as well, because we've lived in a fiat world for the past 50 years, but for a long time the world functioned on hard money, and I think there's lessons to be learned, and there's knowledge that has been forgotten from that low time preference era. So that's going to be my main focus, rather than price analysis and things like that. I think to me the most exciting is what are all the amazing things we can do with Bitcoin, and what are potentially the pitfalls.
That's awesome, man. I really appreciate the answer and all your work.
Oh yeah, you're welcome. Thanks, Anarchy. All right, so this is it. This was my first Spaces, first ever. I know I did one briefly before, but that was a fluke. So this was fun. Feel free to let me know what you think in the just comments under my latest tweet where I announced the space. I think I'm gonna do this again. People have been telling me to announce it. I think that's probably a good idea next time. To me, this reminds me of what it's like to go to an old school Bitcoin conference, and you're just hanging out, and then people walk by, and you're meeting some old friends, and you're learning to know new people, and it's just a fun conversation. It's more fun than listening to a rehearsed presentation, which I never really did. I would always kind of hang out in the corridors and see who was out there. So yeah, thanks for joining, and I will do this again. I hope you enjoy the rest of you guys' weekend. Bye, guys.